You guys should be able to hear me. It is Tuesday, November 22nd. So it's a holiday week, right? We've got the USA celebrates Thanksgiving on Thursday, and we've got so the market's closed, by the way, on Thursday, and then I believe it's a half day on Friday. That's how it usually is anyway. I actually haven't looked to see if that's changed, but typically it's a half day on Friday. Um, Markets during how now realize even though the holiday isn't until Thursday, institutional traders typically don't participate this week at all. There are obviously the like the algos are participating, right? The ones that are not my algo, not this, not our algo, but the high frequency trading algos that's kind of support price action. Those will still be running because they're pretty much always running. And then there are obviously plenty of retail traders trading, like me or you. But the institutional traders that are taking big orders, most of them have finished for the week, or they maybe have some work to do, but infrequently. So it doesn't mean you can't get like a block order going through or whatever, or you're not going to get icebergs. You'll still see them, but the quality and the volume is going to be different. The quality of trading, and I'm not saying like good or bad. I'm not putting any like I'm not judging whether or not it's a good or a bad thing. It's just different. So if you have a process that works really well, for instance, in the regular trading hours at the open, let's say, like a trade that you rely on regularly, and it requires if it works often in the first 15 minutes, it probably requires a significant amount of volume. A good example of this would be like a breakout trade. Those kind of trades, those kind of setups, are not going to have the same result when you have different participants trading, and especially when you have lower volumes like this, because the result basically of these institutions that usually participate when they're all on vacation, the result is lower volume, slower action, right? The bars themselves actually print slower because there's time in between trades where normally there would be trades. So not only is there less volume, but with less participants, you're gonna. It doesn't mean you're gonna get less range in the day, but it's generally going to take longer to do our typical rotations. Like this week on NQ. The voodoo range for this week. Let's see, what is it again? Let me double check. I've got it on my other chart. It is, where the hell is it? Usually I've got it on here. Okay, I will look it up. I thought it was printed on here, but it is 45 and a quarter. 45.25 is our voodoo range for the week. And you can see the voodoo range is as this dashed lines. Remember that a normal rotation is one voodoo range. So from one purple dashed line to the next purple dashed line, those are all 45.25 points apart. And it doesn't mean that every rotation will always touch those levels, but that distance is what we should expect for a typical rotation. That's just kind of how those work. Thankfully, that continues to work. In fact, it might even work a bit better than usual because the voodoo range levels are not based on institutional trading patterns. They're based on the mean reversion algo patterns that which I've talked about in my videos in the past. If you want to know more about the voodoo range, just do a search on my YouTube for voodoo range, and you'll get the instructional video about what that's all about. But anything that works with the voodoo range will work better when the institutional traders are away. which is interesting. And like I said, I think the reason for that is that those institutional traders, they influence the mean reversion algos that keep price action moving in a relatively I don't want to say calm, but like predictable way. Let's say, but when the institutional traders come in, they disrupt that natural state, right? Um, so what you'll see at the open, for instance, on a non-holiday. I'm getting on a little bit of a tangent, but I think it's important to understand. This will demonstrate it, hopefully, for those who've been watching markets. If you look at what happens at the open on a typical day, at the regular trading hours open, all of a sudden, all these new participants have access to the market, and what used to require 30 minutes to accomplish, let's say one rotation, can get accomplished in 30 seconds, right? So if we just assume that most of the rotations are going to be about 45.25 points on NQ, then the question is how long does that take? And then the crazy thing is when you're getting them when the rotations happen very quickly, the possibility for an extension of that rotation increases, right? So the faster these move, the more likely you're going to get bigger volatilities, like 2 sigma events, 3 sigma events, right? It just because the regular rotation is 45.25 this week doesn't mean that every rotation will be that big. And the chances of that rotation extending much further is higher when you have faster markets. And you get faster markets when you have more participants and more volume, generally. You also get it faster markets when you have illiquidity, right? And that results from low participation and then suddenly a rush of participation without a full book, so you end up getting slippage. So it's not a 1-to-1 relationship with volume, but in general, holiday trading, Globex trading, any time where the institutions are less active, the result is going to be slower markets, and these rotations are just going to take a longer time. And if you're used to a certain speed, and then you try to trade a market of a different speed in either direction, the chance that you're going to have like a psychological reaction, whether or not it's frustration or anger, excitement or anxiety, right? Whatever it is, like that emotional reaction, I guess I should say. It's an emotional reaction. It's not just psychological. It's like your emotions get triggered when you anticipate one pace and the results are a different pace. So it's really important to build in like if you have a routine, you should, for like when you start trading, how you analyze the markets before you decide what you're going to do. That routine should involve not only analyzing price, but also the pace, like order flow. And you don't want to get too hung up on what you expect to happen, right? Like I could say, I expect a slow grinding market today based on conditions, right? It's not so much that you have to, when you say that that's your expectation, it doesn't mean that like that's the only thing. You're not always going to be right. Let's just say that. And you need to be prepared for the fact that whatever those expectations were, when they are wrong, you're gonna get triggered, because however, well, I don't know, I will anyway, I'll say, I think most of us will, because once you get a routine of trading a system and you trade the same time and you do the same thing over and over and over again, you get to know what normal is, and you just feel it. You become intuitive when it comes to like what a good pace is for your system. So when you approach the market and you're like, okay, I expect a slow pace today, and then suddenly there's like unexpected like liquidity event or something, right? And you get this huge flush of volume coming in. Chances are it's going to shake you up because your expectations are one thing and you're being handed something else. But realize that the opposite is also true. I think that the first example most people can say, oh yeah, I've definitely expected a slow market, suddenly seen some movement and either got some sort of emotional response, right? It's either some anxiety or some excitement or suddenly kind of feeling a little shaken. Everyone's experienced that and they're aware of it. What I think some people are not so aware of, but it's still totally a thing, is if you expect a faster market, like maybe a normal market, and then you're sitting here waiting for this rotation that usually takes, maybe 10 minutes, and it's been 2 hours or an hour and a half. I mean, in this case, the rotation started at 10:52, and then it was done by 11:20. So I guess that's only 30 minutes. So let's say that we expected this to be in 3 minutes, but it's in 30 minutes, right? So we expected a fast market, but we got a very, very slow market. Chances are you will overtrade to the right of that. You will take trades that you shouldn't be because the time it takes for this slow move, even though it's normal, right? The distance it's traveling is almost perfectly 25 points. So it's a normal move, but because it takes 30 minutes, if you expected it to be in 3 and it took 30, the result is you're going to be anxious to be in a trade because you are going to feel FOMO and you're going to overtrade over here. Whether or not it's to the downside or to the upside, it doesn't, it depends on your psychology. You're either going to, if you're more of a mean aversion trader, as soon as you see this, you're going to be looking for a short and you're going to get wrecked. And then if you're a breakout trader and you were looking for this break, and maybe you're long only, you're gonna buy the next breakout and then get wrecked. So one way or another, the result of these slow markets is that the traders who get, actually this is probably true of all markets, the traders who get emotional generally get wrecked, right? If you've got a condition where you've got patient and not even patient, let's just say, because that's kind of patience is only patience if you actually have a plan to begin with, right? Patience means you wait for your plan to develop. Well, if you don't have a plan, then you're not really being patient. You're just being unproductive, right? So it's not just being patient, but sticking with your plan, having a plan for how you're going to attack this, and then sticking with it, regardless of whether or not you catch each move, is something that only elite traders can do. It's a difficult thing for a human to do, and this is the case in not just trading, but in a lot of things. If you like sports are obviously a good analogy where like if you expected a game to be I mean, I guess it depends on the sport, but if it's just not how you expected, the best athletes, are like the pro athletes are going to be able to dynamically roll with that, but still stay. They might have to change their plan, right? But they're still going to stay disciplined to that new plan. They're not going to suddenly throw the playbook out the window just because they thought they'd be facing, one thing and then it turned out to be something else. They're gonna adjust, but they're gonna stay like calm and collected about it. They're gonna have a strategy. It just might be a slightly different strategy than they thought they were gonna have coming into the day. Right. So we need to do the same thing as traders. We need to make sure that, first of all, that we have a strategy. And then we have a process for executing that strategy. That strategy is not just buy when it gets to 11,624. That's not a strategy, right? That's you have to have. There has to be conditions behind it. I mean, that might be the result of your strategy, but it should be more like, I expect this to happen. This is the area that I'd like to get an opportunity. Right? There's got to be a little more to it. And then here's what that opportunity will look like. For instance, maybe I'll see something on the footprint, absorption on the footprint in this support area at 11,624, and then aggression with high volume coming off of it, right? Like there has to be conditions of not only price got to that level, but then something happened at that level to indicate to you that whatever your reason for that strategy was to begin with, whatever your plan was, is confirmed, right? It's a confirmation that triggers your decision. And so that's what all of these signals and colors mean. They're all visual representations of things on the footprint on here, right? Interpretations of this information, as well as other things, structure and the order book and things like that, kind of what you'd see on like a book map. It's taking all that information, comparing it on a spreadsheet, and then when certain conditions are true, it's indicating it with a colored symbol or a colored bar. It's actually not important to know what they all mean, believe it or not. You don't need to know. Like, I could explain it to you, but it's not going to help very much when it comes to like trading well. The way you build something like this is you start with one idea, maybe two signals, but one setup, and you say, when this certain pattern occurs in this certain area, I'm going to take a trade with this much risk and this target, right? And you study that over and over and over again, and you practice it over and over and over again, and you execute it enough that you see if, assuming you find it works more often than it doesn't, a significant amount, and you can manage the risk and all that stuff, right? It needs to be built into it. But then you execute the trade over and over again until you master it, and you know exactly what it looks like, and you don't even have to think about it like, oh, this is absorption and this is where I'm supposed to do an absorption. No, it's just buy when this pattern happens at this location, right? And the only reason, like I said in the beginning, without the strategy, without the process, just buying at this level is not, that's not going to be good enough, right? But once you've developed not an entire system, but just one trade idea, and you can just say, hey, if I can see these conditions and those conditions exist at this point, and I just buy those and I don't do anything else, you could research it and say, wow, I'd actually make money, right? And so that's how these are built. The thing is once you've mastered that one trade setup, you're going to be doing a lot of waiting for that trade to set up. And so in the meantime, it might be helpful to research other ideas. And as a result, you might come up with another pattern of information that you normally would have to watch the DOM for and the order book for, but you can teach the algo to do that and just alert you when that condition is true. And then if you research and back test and see when that condition being true usually results in a 10 or 15 point move on NQ, then you tell it to inform you that that's happening with a signal. All of a sudden you've developed a second trade strategy. You can then add it to your process, and whenever that one happens in those certain conditions that you already decided were beneficial, then you take those trades then, right? And now you have two different trades you can watch for, so you're less bored and more profitable and all that, right? So I've been building these signals. Well, first of all, I started with all these, right? Just from the trade and perform room. That's the original, what the original algo looks like. And that's got plenty of signals on its own, right? But I've been working with this for a year and a half almost, and in the meantime have customized it and added some of my own signals. So it has admittedly gotten a little busy, but believe it or not, I've actually pared down quite a few of the signals that I just wasn't using very often, and now I've primarily got the few that I do use, and then a few that I am studying, right? So when I say studying, I mean I'm forward testing them, right? They've already been back tested. I know they worked in the past, but what I don't know is, do they work on this exact market in these conditions in the same way as they did in the past? And so I need a period of time where I'm actually running them, and I can collect the data after figuring out the signal, not from the past, but into the future. And as long as they are working, I can then start adding them to my system. But when I do that, I don't do it with full size, because the chance of execution errors increases significantly with any new trade setup. So a good example of that are these blue and yellow boxes, right? Those are inverse signals. And there's one trade setup, two trade setups, like patterns, I should say, where I will use those as a possible entry signal, but I will only do so at smaller size because I don't have the experience trading it, and I've got the forward test and the back test done on that one. I'm probably two of them, right, of the setups that use that pattern. But I don't have the forward testing on all the conditions. Like, how often does having this box here invalidate other trade signals? I don't know yet, right? That's something I'm studying. But a good example, the two places where I know they do work, they're scalping tools. First of all, these are scalps, right? All of these trades are small. We're looking for a portion of this 45.25 rotation, not extensions of it. These are mean reversion trades usually. Some of them are momentum, but we're looking for little bites, right, of the rotations, or counter rotations. So one of the times when these, again, it's blue is the bullish version and yellow square is the bearish version. One of the patterns where those work consistently is when you have the signal followed by a bar that's pointing the other direction, and then immediately you get the signal again, right? So this one, you would need more information to take the trade here. There is actually a way to get it here. But even if you didn't know that it was a potential short here, again, for 10 points, right? Just a scalp, 8 to 10 maybe, or maybe 8 to 15. You would have confirmation that short is possible when you see the second one in a row. Now, it needs to be parallel like this, and you need to have distance to a target that is at least as big as the distance of the bar that your signal occurs on, because your stop goes behind that bar, and really you want your stop back here, but you can usually put it here, but really you'd prefer to have one-to-one all the way back to the apex, this little flag looking thing. But your entry is only once this bar has closed. So when you see that, you can short it here with a stop here, or here if you want to be more conservative if you're trying to push it. But usually it's just a scalp, so you can just put it here, and then you'll get one-to-one very often. The reverse of that would be if we were at support, which we're not, but if we were, and we got a blue one, and then a down arrow, or down bar, and down bar, and then another blue one right after it, and they're parallel. See that? But again, my stop in that case would go under the second bar, and the entry would be once that bar closed. And I've got the level right here, 59.25 is where it would close. So I would probably end up getting long. I could technically get long anytime after that in that range, or as high as one tick higher than it, right? And then the low could be as low as 41, but it would be wherever it was. But we'd have to wait for that bar to close before I knew whether or not that trade is valid. And in this case, it really wouldn't be advisable because we're not at support. And so let's say that for what I'm saying by not at support is, I mean, let's say this is the low, right? And then my entry is here at 59, and the low of this bar, let's say, which is where my stop ends up being, is let's say like 46, right? So it's a relatively small stop. It would only be 13 points, but I would need to think that I could get 13 points above me. So in that case, I'd have to get to 73, right? 73, yeah. So basically somewhere around this white line, just a little bit lower than this white line, is what I'd have to expect. If you look, we've already traveled the full 45.25 voodoo range. We've already done one of those to that upside. And then when we pulled back, after hitting that high, we pulled back only 50% of the way, right? So could it continue higher? Yes, absolutely it could, right? Usually, if it's going to continue higher after just a little pullback, and it's really bullish, that first pullback is going to be at 38.2. Like it's going to go pull back and then immediately bounce. Here, let me erase these lines. I'll show you. We could find examples if this doesn't make sense. I don't even need the levels. So here's your first impulse move, right? If it's bullish, like trending, like a trend day, it's going to pull down here to the purple one, and then right here, it's going to go higher. That's what happens on a trend day. You get an impulse move, right? And then a little pullback, 38%, not even 50%, and then a rip. If it doesn't do that, it doesn't mean it's not a trend day, but it means you're probably, if you get this move here, chances are you're headed to the 61.8. Usually. Not every time, but usually. So usually you're going to get chop, pullback, then an extension. And you're going to retest this support area. You're going to dip back in there and bounce. And that's just the way the markets usually work. Now, realize that there's plenty of examples where that doesn't happen, right? You could have any pattern, right? Markets can do whatever they want. But it's important to know what usually happens so that you can start to identify and measure, judge whether or not you have a good chance of something working or just an okay chance of something working. When it comes to momentum trades, which is really what that is, this yellow squares coming like in these two yellows or blues or two blue squares coming in a parallel fashion like this in a span of just 3 bars, getting 2 of these, it's a momentum trade, right? It's a sign that this guy pushed really hard. They tried to reject it, and he pushed hard again, right? So it's a sign that we might get one. I don't know. We won't know till it closes. But if it's a blue, I guess I could demonstrate it. But I don't know if this will work because we don't have the right pullback pattern for a strong extension. But considering where we are in the chart, it could actually work. Let's see if we get the blue dot first of all. We need the blue square to immediately print here. It would be valid. It's just we're very elevated. And we have not made that significant retracement here, and so you could be buying right in. You're basically buying right into resistance, despite the fact that you don't have heavy momentum, and you're assuming that they're going to regain momentum here. If you think about what you're asking the market to do, it had momentum into the high, and then it pulled back, and it settled down. And so if it closes up here with a blue square, and you buy it, you're thinking that momentum is just going to suddenly reappear. And like I said, that just doesn't usually happen. So I'm hoping it doesn't signal. That's the easiest solution is just no trade. If it doesn't signal, there's no trade. But what I much prefer, something I'd be willing to do with bigger size would be once we got a bigger pullback, if it got underneath here and then came back up, that might work. The problem with buying a pullback here too, if it goes much lower than this, see this big delta here, that big red. There's 600 now. Again, 647 isn't that many contracts, but on a day like today, when you consider the volume of the entire of the day, and like the prices around there, that's actually a pretty significant number. So, and you can see that it's red, which means that trade, that level, it got 647 contracts sold into it at the bid. So someone was bidding and someone sold into them aggressively, right? They filled their order. Not necessarily all at once. In fact, it wasn't all at once. Otherwise, we'd have one of these little yellow rectangles that are not filled in. These ones. I guess I should make them something other than yellow. But these little rectangles right here, that's a sign that an individual price, in this case it's this one here, had like a large order on it. Like an actual order, not just like this one is cumulative delta by price, whereas here it's like a big aggressive order came through here, and so getting above that and staying above that would be bullish, just like getting above this and staying above it is bullish. Now let's say we might end up getting our signal here. We do not, so no blue square. See that? So not aggressive enough to get signaled in here. But we did have an apex trap. So this is technically an entry. It's just very, very thin when it comes to your target. Like whether or not you think you can get 10 points here is, in my opinion, questionable. But see this little flag to the left here? That's what we call an apex, and then we call this bar a power bar, because structurally it becomes very important because there are stop orders sitting underneath them. So when we run the stops but close the bar bullish, you can have if it happens at support, you can have an opportunity for an extension back up. Like right here. See how we've got an apex here, we got underneath it, and then came right back up into it, and that ended up being the low, right? So when you're at support, people put their stops down here, and you get a stop run, right? Stop run, and then reversion. Mean reversion. That is our bread and butter trade for balance days, right? There's technically an apex right here, and we traded underneath it and then closed higher. So technically it's an apex, right? It's an apex trap. It's technically valid trap. The problem is we're taking, let's say, maybe 15 points of risk there, right? Because our stop loss has to go underneath that level, that low of the bar that you're entering on. You're entering right here or anywhere in this bar. Like, it's still valid right now. I could technically still take it long now if I thought it was bullish, and that this was a good place to get long. It's valid, but to make this work, it's got to get, like I said, on a let's say 15, I'm guessing, but 15 point stop. I want that to work for at least 10 points, 70% of the time, so that like, even when it comes to times where I have execution errors or I don't get filled or whatever, I still come out ahead. And it might work. It's valid. They work a lot, right? But I'd have to have strong enough confidence that we could go 10 points higher most of the time, right? Like, significantly more than half the time. So if there's a reason why I don't think we can continue higher right away, then that trade can be skipped, because it's way more powerful after a down move than it is in this choppy period. Like I said, what I really want, if I want to get long, what I want is this: a deeper retracement and then a bounce. But you don't always get what you want. And there we go. We got our 10 points. So it would have worked, and it was valid, right? So I can make a note that, hey, I didn't think it was going to work. I didn't think we had room to push. And it went right through resistance, right? Not surprisingly, the trade that worked 70% of the time worked. But like I said, I didn't take it because I thought it was a little bit too risky that this area up here was going to act as resistance. And even though it did end up, the results were that it did work, right? When I say work, I mean it got like about 1-to-1, right? Because your entry is here and your stop is here, right? And so I'm saying I believe that this is about 1-to-1, if not more. And so the results were it would have worked. But it's not really what I was looking for, because I thought that this low volume node up here, as with the voodoo range in it, after rejecting just under it, I thought that would probably act as pretty significant resistance, and that there's a chance that we wouldn't print this bar bullish. Now, once you get that bar, then you know that then you might be dealing with something quite a bit different than you thought, right? Like in other words, we might get some exhaustion here and then a rollover, or we might get continuation without much of a pullback, grinding up, right? But my ideal scenario was during this chop to get an attempt lower so that I could buy it back up. But I believe this high delta acted as a deterrent for people to sell. No one wanted to sell into that level because they knew that somebody or multiple people, 647 contracts worth, sold aggressively down there. And so chances are, if they got a chance to get out at break even, they're probably going to buy back. And so as a result, we don't even reach it, and then whoever that was needs to puke his position. If he shorted here, if he entered a short back here, whenever that occurred, probably here, he'd have to puke his position. And so that maybe is good enough reason to take that trade, even though it's not at support. And so that, again, that's something that I can make note of. In fact, I think I will. Give me 1 second, you guys. I'm gonna make note of this, and then I'm gonna look back and see if I can find other situations with it. Hold on real quick. All right. Still working through this cold a little bit, you guys. Sorry if I'm all stuffy still. Feeling a lot better, but and not really coughing, but yeah, still got a lot of pressure on the sinuses. So apologize if my voice sounds extra nasally. So yeah, I mean, like I said, I could have been more aggressive there. I chose to take the conservative route. That's just the way it goes, right? You want one thing, you don't always get it. But it is reasonable to think that delta down there underneath us, I may need to think about that acting as support, even though it's not structural support. It's not the location. It's not the, what am I trying to say? Like, it's not a price action support, right? It's not support because here. So what I'm trying to say, if you look back here, same bit. So this is what I wanted. I wanted this, right? And instead we got this, which is fine. But the reason I would have wanted this here and currently as well, I'm not going to trade the breakout, so we're not missing anything. But this is an important concept to understand. The reason I would want this bigger pullback in both of these situations and not necessarily trade this trap here is because structural support is down here. And see where that voodoo range level is? So look, we went 1, right? Voodoo range already. And then, whoops, and then went higher than that. Yeah. So, in other words, the highest I would expect is that usually is that second voodoo range level, unless you're pumping the market with momentum. You're gonna move one voodoo range level at a time. So what I'd like to see is for them to come back into this one that they broke. Previous resistance becomes support and it bounces. What you sometimes get is what we just saw, where it doesn't come back into this structure, what I'll call structural support, like support resistance becomes support resistance, right? It's structural. It's like you can, it's visual, right? Instead of that, what you ended up getting here is this big delta, and then this, see this shaded yellow area? That's a low volume node from the profile. From the profile. Here, I'll show you. NQ profile. So, we didn't have today yet. So this, here, right here, it was the peak, the lower distribution peak here, the high volume edge was right there, right? And then if you go further back, if you go far enough back, there was, oh boy, oh, I might not have enough data. It was an edge there, and then an edge, yeah, an edge there, and there was a point somewhere back here, right there. 1111. It was a low volume area, right? So it could be a little bit smaller. It's not perfect. But that same spot, I believe that's the same one. Oh wait, here. Oh wait, I was looking at the wrong one, I think. So it's from just 1114 right here. Low vol. See that little chunk that's taken out of the volume, and then there's an anomaly over here, right? And then it's here too. So this is the smaller one, and then it expanded, right? And so now if you look to the right, the next day, they repaired it. See how they went right through it? And so many people will erase it there, and that's fine. I will leave it on my chart, change the color, and expect it to act as resistance if we come back into it. Oh, am I wrong? Yeah. And so it's up here, right? So when we come back into it, it acts as, oh fuck, it's the wrong one. I gotta look at this actual level. Okay, 11,660. It keeps here, let's do this. It's just it's moving on me and it's throwing me off. So developed 14, I think we said. 13, something like that back here, right? We got above it, we repaired it, we got below it, right? You think it's dead, you think it's done. It's, oh god, is it, wow, I can't see for shit. It's this one. This one. So we left it here, we repaired it on the 17th, right? No reaction on the 18th. The 19th, you can see that they passed through it with low volume again, and so I put it back on my chart. Fuck, I keep on getting confused. It's this little one. I put it back. Here it is. See the little chunk that got taken out? I remember this specifically because I did my homework last night. So yesterday, see this little chunk? Right? So this was hidden because it was repaired. It's this one here. It was put in way back here. It got repaired here on the 17th. It got hidden, right? It was a volume edge here, so I had a marker for the volume edge, but I hid the actual the low volume node. Then they took a chunk out of it. So I just put it back on. I could have made it smaller. If you look here, I could have made it smaller, but I left it bigger. But if you look at that on this now, what you'll see is that area right here. See the red and the white, right? So we approached it here. We came through it overnight and there was no reaction at all, right? And we come up to it, we bump it, we put a bar completely over it. So we bump it, we put a bar below it, put a bar above it. Now it acts as support, right? Now look what happens over here. That is the right one, right? I believe it is. Oh, it's not. 11,660. You're going to see the same basic thing here. Did we just not reach it? Oh, that's right. We're above overnight. Yeah, we're above overnight. So but you're going to see the same, probably the same exact thing on this one. So we've now put a bar above it, right? We've put a bar above it. So what I would like to see now, bar below it. Oh wait, bar below it, bar above it. We want it to bounce off that area. It's this one. We want this area to act as support on a pullback. So if we can get a trap off this low, that would be ideal. So a little bit below it, and then big rip higher would be perfect. It might not give it to us. It might just grind up and we have no trade, and that's fine. I'm green on the day. It's a holiday. This is very normal. The just grinding higher and higher and higher. There's just all the shorts are just getting ripped to pieces, which I could have told you was going to happen like last week. So we just have to wait. And now we're coming into another LVN. They're all color coded. So once you get used to the chart, it gets a little easier. But this color, the red on the outline and like the brown on the inside, those are LVNs. And so those are usually support resistance. You can't just sell them, especially with this kind of action, but it's a good target. If you were long, if you took the, like I said, this was a valid trade. I just skipped it, right? This was a trade entry here. I just didn't take it because I was not even sure we were going to be able to print this bar bullish. Once we do print that bar bullish, it backed into the voodoo range level and continued higher. So it definitely, at that point, when it does that, reverse into the voodoo range level and rip, don't just stop shorting. If you were thinking bearish, just like, I know you're going to miss the top. Yeah, but just stop shorting because it's not going to work most of the time. You're going to be much better off like picking off pullbacks if it's doing that pattern of ripping beyond voodoo range, coming back to voodoo range, can't get under it, rips higher. That's trend day behavior. So you just don't. And I'm not saying you can't make money shorting it, but fading those moves is going to hurt you more often than it'll help you. So yeah, even though you could identify that, like, okay, there's a good chance we're going to sell some here, you're picking up pennies in front of a train. You know what I mean? Because it doesn't have to. Like, it can just keep going. But realize that on ES, we're right into a voodoo range level. We're right above this high. It makes sense for this to be the high. I'm still not going to short it because this is not bearish, right? It doesn't mean you can't make money shorting it, but if I shorted every single time we came into an LVN or into a voodoo range level at that with this kind of action, I'd go broke. So instead, I just accept that I'm going to miss some shorts on days like this and take the high odds, just turn up the so I think about it like if I'm dialing in what strategies to use when I see that kind of action, I'm gonna get more aggressive on my longs and way less aggressive on my shorts, And so I'm going to skip most of the shorts, and I'm going to take most of the longs. I still need to wait for a setup though. Just because you know it's bullish doesn't mean it's a good time to buy it. Right? But could it just squeeze higher and never give me another setup for the rest of the day? Yeah. And that's just how it goes. I had an opportunity. The process got me long here, and I passed on it. Right? So it's not the problem isn't the process. It's that I wasn't aggressive enough to take advantage of this move. And that's just you schedule time to look into it, like I did. I said, oh, I could have probably noticed that we had big delta down here and they were trapped, so that might be new support. They couldn't get into it. That might be a reason to be more aggressive. I'll look into that later. Made a note of it, go back to trading, right? It doesn't help you to get frustrated. If you can avoid it, just schedule that frustration for later when you're studying it and try to focus on the task at hand. It might not have been a good call, but the important thing is that every day I learn something. It's not that every day I'm like, it's not catching every trade that matters. I miss trades all the time. I sleep through trades, right? Like it trades while I sleep. It trades while I go to my regular job 4 days a week. Like, I miss trades. I'm missing trades right now on CL, and I'm not watching ES very carefully, and I'm probably missing trades there too. Like, it's missing trades is just part of trading. So what's important is that you know why you skipped it, and so that you can go back and you can say, oh, was that judgment did it not only not work out, but was that judgment actually not sound? Did I possibly make that decision without considering all of the conditions that I should have been considering? And in this case, there was something I saw and thought about, but didn't apply the knowledge correctly. I identified that we were in a low volume node and identified that there was a big delta down here, but I didn't think about the fact that that means that I can be way more aggressive and treat this like support. And that's something I can learn to do. So rather than being, like I said, rather than being irritated, I mean, I can be irritated about it, but rather than festering those emotions, instead I can schedule time to do that, to feel that way, and then fix it. And how do you fix it? Well, you look for those situations and you see if you can introduce that aspect into your plan and into your process, so that when you see that kind of thing, you know what to do next time. But this is a good example of what holiday trading usually looks like. It's usually grind up. We usually close higher, and if we do get a bearish move, it's going to be a liquidation break. It's going to look like this, right? It's going to look like a Fed, the Fed day. Or what day was that? That's not Fed day. Hold on, I can't see. That's not Fed day. What was that news? Friday. I don't even remember what the news was back then. There was some news at 9:30 exactly. I don't remember. Oh, that's the open. That's the open of the regular trading hours on Friday. So big volume came in, and you can see how easily they trade through that entire zone, right? And then as a result, these guys get trapped, and that's why this one forms, right? Then these guys get trapped. So now if we come back, we don't have to, but if we come back into this structure, we might expect a bounce, even a significant pullback, just like you got that, right? Or just like you got this. The inverse of that is rip, pull back into structure, and bounce. It's just on a higher time frame. Oh, sorry, I've got all these extra indicators up. You guys don't want to see too much information. And I know I got a lot of levels. I'm testing out a cluster system. Yeah, so I can hide them. Oh, there. So, but now I can't draw on the chart. So, just like we got this pullback that produced continuation, if we get a pullback now back into like 11,625 area, that could bounce. Now, unfortunately, we've already gotten it. See that? So we may not get it. It may only go to 11,670 again and then rip higher. But you can see that we're working through this wick of trapped buyers. And all of the people who sold here put their stops up here or up here. So chances are we are headed 100 points higher. Not necessarily today, but there's a very high chance that 11,760.50 is going to get hit. Very high chance. And honestly, it could. We're probably going to 11,851, if I had to guess. I think we're probably headed much higher. I had some calls and I sold them at the open, which at the time seemed like a really good idea, but now I sort of wish I would have kept some. But yeah, I had a read that we're obviously going higher, and figured I'd take it with calls, and did not like the fact that all night that London session was not constructive in the way that you would need to support an extension higher right away. So I felt the need to exit the calls. But the truth is that the trend has been up for like a couple of weeks. So it would have made sense to buy them back. Or to, like I said, hold one or two of them, like just a couple. Because at that point, if you've made enough on the core, you can just hold runners, you know. So that's what I should have done. But you're welcome, Hassan. You're very welcome. Hopefully, like I said, hopefully this is educational or at least entertaining. To think, yeah, like I said, and the whole point of doing these is just to help you guys see like what a process looks like. That's profitable, and what you'll see is that I don't take very many trades, right? Because even though I've got a lot of different signals and patterns that can set me up, they aren't always the conditions aren't always right for every single one of those patterns. So in this case, literally all day, every long has pretty much worked. I think we had one spot that if you were super aggressive, you might have bought it and it stopped out. But like we're literally like 90% accuracy to the long side today, which is unusual. Usually it's more like 70%, which is still good, but it's like all of the longs are working. We also had one short. I know one person in the room shorted this and got paid. This one and got paid here. Yeah. It was the high at the time. Yeah, this was the high, right? Yeah. So it was this one. They were shorting that. But most of us recognized pretty early on, and Simon in the room was just like, you know, it's holiday season. You're better off not shorting. And it's true. You just grind up is just what they love to do. These algos I honestly think whoever programs these mean reversion algos that keep the market kind of steady all day, they're not very sophisticated. They really they are on all the time, pretty much, and so they're built just to grab tiny little like bites out of the move, but they're not that sophisticated. And while they do clearly learn and adjust, when the market starts running in one direction, they either pile onto it. I don't know exactly how it works, but they either pile onto that, or they get turned, like they shift. They're still working because they end up supporting these levels in like really predictable ways. So yeah, when we get this grind up, it's really important to what here. I'll show you on this chart. It's easier to see here. So when the market is moving in one direction, what you'll see is these levels, the yellow levels, will get a perfect test. Here, you'll see it better on like a smaller time frame. A perfect test and a bounce, like literally to the tick, or at least to the point. Oh, you can't even see it there, but it'll be up, hit and run, hit and run. Let me find one earlier. Oh, this is this week, so we'd need it to happen this week because they shift every week. We don't have a great trend. It's just been pretty choppy, but it's a test like this or like this after a rip higher. Like, see, it's got to have an impulse move and then a pullback, like, and then it'll do this, like that. Right, that one didn't quite reach it, but it's that's what it looks like. Big impulse move up, pull back right into the level, bounce, can't close below it. Pull back right into the level, can't close below it. And then on the smallest time frame, you can't even see it on the 3 minute. You can see it on the you can see it on the Renko though. They pulled right now. They might do it on a higher time frame, which means they may eventually pull back into 70 again. But you can see someone tried to sell it right here, and they couldn't even get it, like maybe one tick below it, and they supported that. And this dashed line here, the blue dashed line, that's where all the volume is. So when you see these big rises like this, that's what I call a volume shift, and they're really significant. Usually, if the market, you're going to see two things happen whenever you get these volume shifts. And thankfully, this is built into the algo, so you don't have to think about this. The signals are already built in. But just so you know, because if you don't have the algo, you wouldn't have the signals. But if you track where the volume is, the majority of the volume is, and you get this big shift where it was down here, and then you get price moving, but no real shift in volume, and then suddenly you get another one with big volume, what you'll see is that this area here becomes the target for pullbacks. So if I had to guess, there was a pullback coming eventually. Our primary target is going to be here. And then if you measure that, let's say that, I don't know if this is the top, yeah, but let's say it is. All the volume on this move is now all the way, the majority of the volume is at the top of this wave. So if you can get under that, so if they turn around right here and get under it, you're gonna get a retracement into here, and then that is potentially going to be resistance. So if you're looking for a short, that's the kind of short that might work. But like I said, I really do think that this market is eventually going higher, so I'm not that interested in shorts. But I mean, just because they just aren't going to work, like they're going to do this where they start to work and then they just rip you up. So like if you're just looking for like 8 or 10 points, it might be fine. But like I said, it's going to not work more often than it does work, unfortunately. Let's see if it's the same thing on ES. ES is potentially, it needs to print, it needs to get that yellow line underneath the pink line, and it needs to be a bearish bar that's not purple. This one hasn't done it yet either. But this is ES 6 tick. So it's a little bit faster. Because ES is just slower in general. It's easier to process, so I can look at it fast. And then this is actually the 16 tick of NQ. When it's slow, I watch this because you can get more setups on it. I haven't been paying much attention to it, but I'll show you. There's great opportunities on that as long as it's not moving too fast to process. You will take more stops though, but they're going to be smaller. Yeah. When you get this one triggering at the same time as this one triggers, the chance of the move working is better. Well, let me clear my nose again. I'm getting all stuffy. Hold on, guys. That should help. Getting sick sucks. That's all I'll say. Illness is no fun, even if it's not serious, man. Such a pain in the ass. What I'm trying to say is I take my health for granted, right? You kind of forget how miserable you can be when you feel sick. If you're feeling well, you forget just how how hard it is to stay focused and productive when you're not feeling 100%. And like I said, I'm actually feeling better, but even still irritated by the fact that like still getting rid of this virus. Note ES looks a lot more. What can I say? Like if I had to guess what a top's gonna look like in the short term, it'll look like this, where it can't close even a what is this, a 30-minute bar or a 15-minute bar? Can't close a 15-minute bar. Is that the 32? Yeah. Can't close a 30-minute bar either above the Buddha range level, and that means it also can't close the bigger ones. So if at 10:45 or 11, my time, that's 1 o'clock, right? No, 2 o'clock Eastern. I'm Pacific. But if we close this candle lower than 39.96, we're gonna get a nice retracement. When I said clusters, what I'm looking at by drawing fibs and measuring some other things and using the Voodoo range, when I'm getting these multiple levels all occurring at the same place, see that? They're acting really, really well as like additional support resistance lines, whereas like if it's just a single one that just happens to land here, it's like nothing, right? So this is a cluster, and you get a reaction. No cluster, just one, and you get like overshoot, rip right through, right? One, way overshoot, rip right through. One, they try, rip right through, and then now this one this is the root of one of them, so that doesn't really count. But then if you look down here, I'll move it. There's a cluster down here. This is just two, but you can see you got reaction here, reaction here, reaction here, reaction here, reaction here, and pretty close to reaction here, right? Although this one was just a single and it got a lot of reactions too, so it doesn't mean it can't get them. But it appears, first of all, that when you have a cluster of these like this, that you're gonna have a higher chance of reacting. But then the other thing I've noticed is that once you get over a cluster, so if you're going up, right, and you reject out of it, and then you pull back, you're probably headed for another cluster or a Voodoo range level. See that? And then once you get over it, probably headed for another cluster or a Voodoo range level. So that's kind of neat. Here, I'll show it to you on NQ. Like I said, just a new wrinkle in my targeting process. Okay, so cluster, access support, gets traded through quite a bit, but then access support, access resistance, access support, yeah, kind of worked there. And then we have, obviously the Voodoo range is working well, but look, here's a cluster with the Voodoo range, and look how nicely that one acts, right? But we've traded through it, so. And then there's a cluster up here. But look what happens, again, when you get through a cluster, right? So you have to use it as resistance or support and then get through it. So used it as support, broke through it, headed to a Voodoo range level or another cluster. Cool, right? Tried to break through it, failed, headed to another cluster. Maybe even a Voodoo range level, right here, right? And then once we get through this, and we get through this cluster, it heads to another cluster, or maybe a voodoo range level, or maybe another cluster. And that's like I said, it has stops along the way where it's bouncing off these little like midpoints and like 88.6 levels and stuff like that. It's not like it's perfect, but if I had to pick, what I'm thinking about is that it may help me choose which levels are the primary ones to look for support resistance, and which ones are more likely to be like rotational axes, right? So, for instance, when I have a cluster like this, the chance that this one is at one point going to be support resistance is probably pretty high. And then, and like here we have like this along with the voodoo range level, and then there's another one above it. So like this whole area here, it could be considered a cluster, right? That means that this voodoo range level is probably going to be pretty important and potentially a rotational axis, because it's not the cluster, it's not here, but the levels are like surrounding it. See that? They're like all around it. So as a result, you're going to get, if you think about it, if each of these levels, this and this and this and this and this, if they're all going to eventually act as support resistance, and I know that this level, this yellow level is very important, well, most likely you're going to go from level to level here, and the result is going to be rotation around that midpoint. And so this is the cluster, right? So this is probably the rotational axis down here, because it's got to make it back to the cluster over and over again. And to do that, it's going to rotate around 11,579. Whereas when I have one down here where there's no clusters really anywhere down here, this one is 2 bars, or 2 lines. So I guess you could call that a cluster, but it's not. I guess it's got this one too. But this one appears to be acting more as like traditional support resistance. And maybe it's just because these lines are so far apart. Although, so are these. And then but they've got a cluster above it. I don't know. So I'm looking at it. I'm not totally sure what the how it all works, but it's something I'm looking at. So just like I said, I'm always investigating new ideas and taking old ideas and seeing like, wait, what if I apply that to this other thing? What happens then? And you don't have to necessarily trade it all, but you can study it. And then eventually, if it's working, then you trade it. So, like I said, those aren't tradable ideas. They're just like, huh. I wonder if there's something to gain from this. We'll see. We shall see. And like I said, I am not surprised at all that the Bears can't get anything going here. Not even a little bit surprised. You can see that they can't even, as of right now, they can't even get a bearish close below all this volume. As soon as they get below the volume, they get buyers. What does that mean? It means sellers are trapped. More than likely. Like those buyers are yesterday's sellers. Or this morning's sellers. Like you guys, retail is just getting crushed here. The majority of these, like there's so many retail bears right now. It's amusing, but honestly only because I've been there, right? Like it's amusing because I've been that guy who was so sure that like this is the top, it can't go any higher, and then like anything you see that's bearish, you're just like, see. Like one bearish bar, you're like, I knew it. No, like if you're doing that, like, cut it out. Like, make sure that whatever you're basing your decisions on actually has merit. Not just like, so and so said it was short if this happened, like, or inflation is too high, or the correlation between oil and lumber is too strong. I don't care what it is, right? Like whatever your crazy reasons are, everyone's got their own unique styles and stuff. But if you already have the bias and then you're looking for any, like if you have that one core idea is like, this is how I know if it's bearish or bullish, and you've already made that decision, and then you see price action doing the exact opposite of what you thought, and then you catch yourself literally looking for confirming, like information that's confirming your bias to the point where you're going way beyond what your normal process is for making decisions, you are not trading a process that is going to result in repeated profitable results. You're like, I'm not going to say you're going to blow up, but you probably will. And like I said, I've definitely been there, and it's an easy trap to fall in because it's psychologically really painful to be wrong. And so we avoid that pain by convincing ourselves that we're still right. And eventually the pressure gets so high that if you're still in an actual trade, you'll start putting yourself in situations where you have very, very difficult decisions that should never have even been a consideration in your system. Like, I don't have a good answer for what to do if you didn't trigger your stop and you're in the trade and you're 100 points down, but you usually take a 15-point stop. Like, I honestly don't know what the best the plus EV move is there, right? I don't have it in my system because if I miss a stop, I'm just out of the trade. Like, mark it out no matter where we are so that I don't get 100 points behind, right? Like, that's a really difficult situation, and like the considerations for what you should do in that situation are it's like it's going to be a lot. It's going to be harder. It's going to be hard to be put in that situation over and over again and make money. Let's say that every time you risk putting yourself in that kind of situation where you're 100 points underwater or whatever, and you don't have a plan for what to do, every time you get in that situation, the likelihood you're going to blow up in the future increases, because it's not just that the situation is dangerous, but it's the bigger problem is that you allowed yourself to get in that situation, right? Like we should have mitigating. We should have a process that mitigates those possible difficult decisions, so that we never have to make them. Right? Like when I see people on Twitter being like, "Oh, I'm getting short," and then like the next day they're like, "I'm adding puts and I know I'm right." Right? Like this is gonna exhaust. Like this is a fake pump, right? Like all of that kind of like boasting, like you should never need to be in that situation where like you feel like you have to convince yourself that you might still be right. Your system should protect you from that. And if you don't have a process that protects you from that, you're in the majority, right? And it's human, but find a process. You know, it doesn't have to be this one, right? It doesn't have to be the trading before one. But this process is good. It works great. And it doesn't have to be as complex as what I make it. Like there's much fewer signals to learn in the core process. Much easier, right? I just complicated it because I want to trade more. But realize that there's plenty of other processes out there that exist, I'm sure. Whether or not you build your own or find another one that's already been built. But just make sure you actually have a process for making decisions. And that you actually follow that process for making decisions. Because if you're not, then you probably shouldn't be trading. Okay, so all these little yellow squares that are empty like this on the side of the bars, it's an indication of, like I said earlier, it's a sign that there's a ton of volume coming in. And you will see it at support when you're in when you're in a buy trend, you'll see it show up at new support. See that? And then when you pull back into it, it's a good opportunity to get long. But you'll also see it near the highs as everyone capitulates. So you have to be a little careful. All by itself, it's not like an immediate buy signal. You have to see what the market does in response to those prices. And so it prints a little green. My system prints a little green line that's like shaded. But I have it disappear once it interacts, because usually the primary setup is wait for the pullback to hit it and bounce and then get long. You really don't want it. Okay, it can be the next bar, I guess, but it's better if it continues a little higher and then comes back and fills you. But this is usually what happens, is they just support it because it's grinding. They just keep supporting that level, and anybody under it ends up being a buyer in the end. Right? So all of these just anybody selling down here just gets absorbed, and we keep going higher. That's what usually happens. So, I mean, if you want to be aggressive, you could just buy when that happens. But when that doesn't happen, there are other patterns to use those for. The rejection and then returning and absorbing on the other side are really good setups. So I will say I only have the bid, is it bid or ask? I think I only have the bid version on. I could do a second signal that occurs when that aggression is on the offer, and then it would be a better short opportunity, but I'm primarily long trading. I'm trading primarily the long side. So I could double the amount of like signals for these, but it's already like, I've already got enough signals, and I just don't do enough shorting, and I don't have the metrics to whether or not that actually works, but it probably does. But most of these yellow outlines, these rectangles that are outlined yellow, they can use, especially if they occur on bars with arrows like this, that bar becomes support. Particularly its POC. So, oops, that should be locked. I must have moved that. Lock. Give me this. Give me that. Thank you. Oh, what the hell? Okay, so the POC of this bar, see the little yellow rectangles to the left of it, so that I can see where the POC is. So it's right there. That level becomes really solid support on the first test back. Like I said, I just wasn't ready to take a long there. I clearly should have, in retrospect, but yeah, did not have the faith that we would get this. But you can see that this hole here, if you measure the entire move, you have all this volume at the low, and then all this volume at the high. See that? And then you've got this volume node in here that acts as support. So this high volume area here, that now needs to hold. And you'll see they did hold it. But now that we've put in more yellow rectangles, I know it's kind of busy because it's usually not this many. This is very rare for it to do this, like one point after another with heavy volume. But like people are getting squeezed right here, and that's why it's looking all messy. But this high volume node now, from this rotation, it needs to hold. If we get under it, if we get down here, especially if we break underneath, well, it really is this now. We could, this next pullback might end up being a little bit more severe. And then if we do that, this will then be resistance. But it doesn't have to happen now. You can't just short knowing that. But it basically means that I don't really want to be buying in this zone anymore, unfortunately. Because I would love, it makes sense on a higher time frame for it to hold, but seeing the order flow here, getting underneath that volume, and then rejecting it would be really problematic. So basically, bulls are going to need to either withstand a significant pullback and then bounce again. And when I say significant, I just mean like back to 11,650. But at this point, that's a full rotation. Yeah, if not two, right? So, um, at least back to here, I think. The only other alternative is to increase momentum, but these volume anomalies, they can produce extensions, but I don't think I've ever seen them show up at the top of an extension that started with one and cause another extension. But I don't know. Like it's weird, right? It's holiday trading. That might not be that unusual. I have not watched that signal for very long. But what I have seen a lot is we get underneath it, we come back up, and it acts as resistance to bring us back here, and then we rip higher. So it doesn't mean we're bearish just because we get under it, but it means don't buy right away. Let me run to the restroom and grab another drink. I will be right back, you guys. I'll leave the thing running so you guys can watch. I'll be right back. There's really nothing to do though. We're coming up on a previous high from, is it Friday? Hold on, let me just check this. Yesterday? Yesterday's high. Back to yesterday's high. So it may, like I said, I would love to see a pullback here, but I really don't want to be a buyer in this zone. This extension with all this volume at the top is going to cause potential problems for longs in this area. So the 11,670, as much as I'd love to see them bounce it, I don't think it's going to happen. So we'll see. I will be right back. Let's see if we can get a pullback. Let's see. Okay, so see, like all those yellow square rectangles, like I said, are volume anomalies on the bid side. So people were selling a lot more heavily. I believe it's bid side. Yeah, selling a lot more heavily there. And you can see that someone bought like one tick above yesterday's high, 4,026, and that's what caused this little spike and reversal. So now we've got the exact opposite situation as we had down here. Where was that? Oh, but a lot bigger. So before it was 647 down here. It looked a lot bigger because at the time that was a lot, right? Well, now 4,026. So a lot of contracts went off on the offer. So someone basically like took 4,026 contracts off the books from someone who was selling them. When you get that big of a buy, and especially after all of these heavy volume sellers here that were selling into this move, right? And then suddenly you get this big buyer. You're going to get a retracement to make sure that that the buyers are still in control down here. You can see the very lowest one is here, right? And it got tested once and we bounced. And then the lowest one here got tested and we bounced. And then the lowest one on this bar is here, and that got tested below, and they're trying to bounce it right now. So that's very normal. If you want to scalp it long, you put your order here and you try to get long on the green lines, the green shaded area, at the bottom of the green shaded area on the very next bar. And like I said, it's super aggressive because if it doesn't work, you get crushed. So you have to have a reasonable stop. But I've used that in combination with the smaller 16 tick. So for instance, like once I see that and I get a green bar, I'll scalp 8 points. And it works. You have to be pretty active. But when it's this slow, you can. The real problem with doing that is that I don't have the account size to do it with the minis. I have to use micros if I'm going to be that active. And the fees and commissions on the micros is just so fucking high. So you have to do pretty well scalping if you're gonna scalp 6 or 8 micros. It's, believe it or not, it's actually kind of tricky because the problem with them is that if you're getting, let's say you get 8 points on each one, but 8 to 10 points, but every time you take it, you lose 12 to 15 points. And let's say you have a 50% win rate. You'll make money, but you're going to pay a third of your profits into commissions. Whereas if you can do it with minis, it's like not even a 10th of your profits, right? It's like a 30th or something. So it's just a lot easier to get ahead if you have bigger size. Okay, so we've gotten underneath this last green line. So buyers need to save this here. If this closes bearish, it's probably coming back through this area here. I do not expect 70 to hold personally, if they can close this bearish. But look, all the volume is up here, right? And we have not gotten a bearish close yet. So it's not bearish until the sellers follow through. The trouble with the shorts is that I can't just sell a breakdown. I would have to wait until it came back up here and then rejected. And sometimes it just doesn't do that. So with the shorts, it can develop very, very fast. And it's not that you can't do that. It's just that if you're gonna do it, they develop so fast that to be able to catch the shorts, you almost have to anticipate that they're going to happen, and you end up shorting this and shorting this and shorting this, right? And like one of them will work, but then you won't. So you don't get as good of a win rate with the shorts, unless you wait for the development. But yeah, I'm not going to buy in this area, even if they set me up. Like if they pull back and then they come back up with a diamond or a star, I would normally say, hey, it's bullish enough. I can buy it pretty much anywhere as long as I've got the signal. But because of all this volume here, once these sellers have some momentum, they can liquidate. They can do a liquidation break. So it's, if you're going to short, this is your best opportunity you've had all day. I'm just not going to do it. Okay, they still cannot. Oh no, that one did. So this one closed bearish with the yellow line, the dash below where the volume was on the wave up, which is at the highs. So now it's technically bearish momentum, and so it's not time to short yet, but it's time to stop longing for the moment and see if they can develop a short setup, and they might not. Like I said, they could just drop it, in which case I miss it. But if they can come back up here and try to test that volume level and then reject, and then it gives me a signal like an orange bar or a star down or a diamond down, I can take it. It's got to be a sign of aggression back up there. Like this star and this diamond is technically valid if you're aggressive. And having the arrow there only helps. Because again, that's a momentum shift signal. But you can see that you can't just sell every one of those, because you'll get wrecked over and over again. So you need the conditions to be correct. And if you can tell the difference, like we had a lot more going on here with like the volume and the delta, and also the location was above yesterday's high. So if you waited and you didn't just short every single time you saw it, but instead you waited for one that happened at location, you're already in profit, right? But for me, it's the shorts can be very addictive. And if I start getting aggressive with shorts and they fail, I have the potential to go on tilt because I'm very aware of my numbers. I know what my metrics are, and I know when I'm losing shorting, if I'm taking losses on the short side, the chances that I'm going to have a red day are actually increased. Whereas if I take most of my losses on longs, I can usually recover from that. But if I'm taking losses on shorts, I'm probably break even or red. And if I was green in the morning, I'll probably give back that money. Especially if I started out saying I wasn't going to short, and then for some reason later on changed my mind and decided to short, and I lose a short. If I lose more than I make on the shorts, chances are I lost money that day. That's what I'm trying to say. I know that's my metrics. Yeah. So knowing that, I'm not going to be aggressive with the shorts when I'm making money, because I'm green on the day. It's not anywhere, not near my goal, but I'm green on the day, and I want to, in this price action, I want to be very conservative and only take the trades that I feel confident with. Now, like I said, this long, I didn't feel confident with, and it paid out beautifully with like a 50 plus point move, right? So I'm not always right. But yeah, it's, I think there's more reason to be cautious on the short side than there is the long. This red arrow appearing here indicates that sellers absorbed a heavy buyer. And we can see it here too. So it means on this bar, there was a big aggressive buyer and the sellers absorbed him. Now it's not immediate, it's not always a short signal. But if you were looking for a short signal, that helps, right? If you already have conditions like the star and the diamond and the arrow, and you just needed a little bit more confirmation, it works great like that. What I usually use these absorption signals for is actually to identify a location for future trades. So if we can get some extension here, and then we break out back up to the upside, this area will become excellent support. The 11,700 would create great support. But first, we usually need to liquidation break and then build our way back through it. It's not immediate. It's like the next day, maybe, or 2 hours later. I can go back and find some if you want, but let's just see what happens here. Because, like I said, sometimes these liquidation breaks are actually pretty quick on holiday season. So, yeah, we might see a pretty big breakdown. We'll see. So the purple bar indicates that price is dropping primarily because buyers are giving up. They're pulling their orders from the order book. And obviously there are sellers, but they're not aggressively like taking out bigger and bigger orders. Like with the diamond and the star, if it's on the regular gray bar or an orange bar, it's an indication that they're aggressively, like when I say aggressive, like they're taking orders off their order book, and even though buyers are trying to absorb it, they are continuing to push through, which is basically what that's what that triangle says. Is despite, you can see that one's not purple. So despite the fact that there were buyers here adding to the order book, sellers just increase their aggression, right? So it's a sign of follow through. You won't see them at the apex, but it's a sign of follow through aggression, and it can be. These guys can become very the ones with the bar with the triangles, the down and the up triangles. So the up triangle looks like it's, let me find it. Oops, it's white right here. So see how once you get this triangle in here, that area becomes support. So if you want to be really aggressive and you know it's trending, you can buy dips into that support. Here's another one. So once you get over this one's not positioned very well because it's way outside the channel, but I'm talking about this shaded channel. But once you get over this, generally you'd want the first pullback to get bought there. I don't know if it will this time, because this heavy selling up here and then the absorption when they tried to push over when they did push over yesterday's high, and then getting that triangle down, following through underneath all that aggressive selling, yeah, that's a change in character. Let's just put it that way. So I'm on pause unless if you're down with shorting, that was it. But if they come back up and reject in here, that could be another short. I'm just not super pumped about shorting a trend day like this. Like, it's not saying it never works. It's just, yeah, I've had a lot of experience where you think it's going to work and it doesn't. And it's just, yeah, like on days like this, if you open yourself up psychologically to taking both sides, in my opinion, in my experience, when I guess I can say it from my own experience, when I open myself up to the idea that I can long or short on a day that's just grind up like this, trend day up, grind up, there's a good chance I'm over trading. By the end of that, as soon as I've accepted that, okay, I'll take shorts now, like, yeah, chances are I'm going to overtrade. I'm not saying I'm always going to lose, but I probably will have way more trades than I should have. Because it doesn't always work on the first try. Because what you're basically trying to do is you're trying to fight a trend day if you're shorting up here. And it doesn't mean you can't do it. You can fade trend days. It can be done. But it's pretty rare to try once and get it. You're probably going to have to try 2-3 times to get it. Like, I do have tools to help me determine that this one is more likely to be the top compared to this one, but that's not at 100%.
process. So I wish it was, but you know, that just doesn't exist. And there's been a lot of times in the past where I have all the indications that this is probably the high, and because momentum is just so strong, they just don't care and they keep pushing. And these guys just end up being the new buyers. So the safe way to play it is just to wait for the long setup. And if you you know, if you're getting anxious to trade, you're better off just stepping away. And now you can use the smaller time frame. This one had a short here. This star would be a short, and then this one here with the diamond and the star would be a very aggressive potential short. But the pink bar followed by a star in a bearish environment usually works. And then once you've gotten that lower high, stars, diamonds, orange bars, and arrows are usually good for shorting. And like I said, that's a scalp on a tiny time frame. This is a 16 tick. So each one of these bars is only 16 ticks. That's 4 points, right? So 2 bars here is only 8 points, whereas 2 bars here is like let's see, 24, so 12, right? If they're going in the same direction, you're getting 12 points here. You're getting 8 points here. So it's significantly more zoomed in, but most of the signals are on both of them. So you're more likely to get triggered into a trade on the smaller time frame, but you're also going to have more stops. But those stops are going to be smaller because each of these bars are much smaller. So that's the good news. Rather than having a 15-point stop, you might have a 10-point stop. But you're going to get, rather than having a, let's say, 72% win rate on the best setups on the 24 tick, you're going to have like a 65% win rate. And that's, like I said, that can still work out really well. You just need to be conditioned to take those stops and just not let it change your plan. Unless you take a bunch of them in a row, then you should have some sort of something built into the plan that makes you stop doing that. But so that big delta is where all the volume is. That dashed line is where the majority of the volume is. And so they have not shifted volume. So we're watching for that volume shift. See this volume shift up? See, they blow it off, and then what do? They try to retrace into that, right? And the bears are trying to shift volume lower. And if that happens, it can become a lower high on that tiny time frame. On the bigger time frame, you can see volume. They are successfully shifting volume lower, but it's not like this, where it's a sudden burst. They're just grinding it down. This grinding stair-step pattern happens in bullish markets. That's a bullish pullback, basically. This big move up happens in bullish markets. When those are reversed, when you have the big shift down, the big fast shift down, and then stair-step up, big shift down, that's bearish. Like I said, you just get used to knowing what to look for, and when that happens, my algo will signal to me with other signals, with other visual signals like color bars and these arrows. It'll tell me, but I have the originals, the what's it called, like I forget what the term is, but like the actual metric that the algo is looking at, I've got it still on the chart so that I can kind of anticipate it coming. And also because they become really good targets. Like these bursts become really good buy zones in a bullish market. So I still have it on there, but I don't necessarily have to watch it very closely. I'm just looking for like certain conditions. But what you'll see is that when you get them, see like big impulse. See the volume shift up, stair step down. See that? And then you'll start getting signaled in. And then you'll get a move up, right? And then down here,
Here's one. Big volume shift up. All right, they bounce above it. They orbit it. They bring price down. They can't even get volume down. And you start to get signs of aggression, like the diamonds. See that? So it's already built into the system. It's not like something you have to watch. But I have it there so that I can watch it. But yeah. A lot of these signals are there, even though I could technically turn them off because the algo's reading them for me. I like to see them because I built it and I know what they mean. And I've gotten so used, think about it this way, I've gotten so used to reading it manually that I like to have I like to be able to anticipate when they're coming, but I can't take the trade until the algo says I can take the trade. That's an important distinction, because I can my eyes can identify where a potential setup could come in, but the setup's not valid until the algo triggers me in. And to get that to happen, I need a bar to close in the direction I want to trade, and I need to see that signal show up. And a closed bar, not a live bar like this. Like this star right here and this purple bar, it's not necessarily valid yet because the bar's not closed. But the one before it, this star, is valid. That bar is closed. So if I was waiting for a star up to get long, I could take it right here. If that star wasn't there and I was waiting for a star to get long, I could not take it until I get to this 11,689.50, because that's when it's going to close bullish. And that's when that star is going to be confirmed. And then it'll never disappear. It'll be there forever. But when it's live, it's giving me a warning of like, this will be a star if it closes bullish, but we don't know where it's going to close. It could still close bearish. So if it gets to 11,677.25 first, before 89.50, that star is going to disappear and it'll never be there because it'll be a bearish bar. So that can be a little bit confusing at first when you first start watching. You see like it looks like signals are flashing on and off. It's because it's a live bar, so the signals aren't valid until it's a closed bar. But it gives me warning during that live bar so I can prepare my order to get triggered in at 89.50 or whatever, if I was looking to get long. Now, purple bar followed by a star here would technically be a long signal. It's in that zone that I said I really don't want to get long, but you can see that I was being conservative here and missed a huge move. So I wouldn't blame anybody for buying a star here. It makes sense if you think it's just going to keep trucking, and it might. But with all of this volume up here that went off, and we're us under it, I expect that to act as some resistance. So, and the location, and then the absorption, all of that together is this one was sketchy because of the location with the LVN, and we just ripped right through it. So, to be fair, who knows how strong this momentum is? But, yeah, you'd have to be pretty aggressive, and you'd have to have a reason to think that price is going to continue higher without a significant pullback. And if you look at what it's done so far today, it's made a couple relatively significant pullbacks. But you'd have to think that this is going to be... Now, we do have a cluster right here of lines, so maybe that is the low. But then, do you have a target 10 points higher than this? I mean, I guess here. That's a lot higher than this. It's 40 points, right? But what I'd really like to happen is to pull back another 10 points at least, solidify, and then take off. That would be so much more healthy than just up, little pullback, up, little pullback, up, little pullback. But you get what you get. So technically, if this is a star, it's a buy. I just don't love it. Am I supposed to take it? Yeah, I'm supposed to take it. But it's hard to take, just like this trap was hard to take, because this apex trap, it didn't look like support at the time. But whenever we have a flag like this, and you trade under it, and then come right back up into it, and you're trending, it's valid. You're going to get 10 to 12 points often. Sometimes you're going to get 50. Sometimes you're going to get more. Especially after you broke a flag on the upside. That makes this better. So,
That might have been a mistake to skip, but I like that trade better than this one, and I didn't take this one, so it would be pretty aggressive to take this long. We'll see, but we got a lot of reasons to be cautious up here. Like this is very, very abnormal. Like you usually get one of these. See these little rectangles? You usually get one. There's like 1, 2, 3, 4, 5, 6. I think I count 7 in here. And so those are all sellers getting aggressive in that zone. And then we traded under that. If we get above it, it's going to be excellent support. So you have to believe that after this tiny little pullback to a level that is important from before, but that you're just going to rip right through that on the first try. It could just squeeze. It could just squeeze. But I don't love it. Where's all the volume on the way down? Oops. Fuck, I'm going to miss it anyway. The volume on the way down is way up there. Darn. That sucks. So that's going to be resistance right in the middle of that LVN. That's going to be resistance. And then see, the other problem is all the volume on the way up is at the highs. So they're together and we're under it. Pretty sketchy spot to buy. It looks like it's going to trigger me here. I think it's going to get... Oh, no star. Perfect. The algo says forget about it. Don't do it. That's even better. So see, that star is not valid yet. It needs to close up here for that star to be valid. And like I said, I kind of doubt that's going to happen. But if I would have gotten a star here, I would technically have been triggered into a long. But it's my discretion of which ones I'm going to take. But it's a valid long, and I'm pretty sure I'm supposed to take that, even though it looks really scary. Pretty sure my coach would say, you take it anyway. But it didn't trigger, and I'm relieved because I don't think it's going to work. But the algo knows better than I do. So, and the algo says don't do it. And so if the algo says don't do it, I'm definitely not buying it, especially if I was planning on using my discretion to not buy it because there's resistance up here. So now this is now the high. See that? We have this green here is a previous VPOC, and we tagged it and then reversed, which is really, really common in markets that are controlled by retail. And holiday markets are definitely retail heavy. So the retail traders had a target of that previous VPOC. I think it was a naked VPOC. Yeah, it was. Naked is green. Naked VPOC. We tagged it and we reversed, and the sellers absorbed it. So the chances that this is actually the high, like the real high, is probably not very good because it's a retail location. But the chances that you get a reaction from it is high, right? So in other words, you have a good chance that you're going to get a pullback, but a pretty poor chance that this is going to be the high of day or the high of this entire move. It'd be pretty rare for that just to end. If you've got momentum, you're going to get a reaction from it, but the momentum is going to recover, and it's going to take that out and go to a more conspicuous place, like behind. Well, it's also above a high of day though. So in this case, maybe it could be the high, because you've got this orange is a previous high of day, yesterday's high, and we traded above it, and so there were stops. There were buy stops. So people who sold got stopped out. If they put their stop above yesterday's high, they would have gotten stopped out here. So that's a very natural liquidity target where the market likes to go. And if those get rejected heavily enough, they can be the end of a move, not just a reaction point that then gets overtaken. But yeah, the fact that those both came together like this, where you have a high of day and a naked VPOC from a previous day, previous to that, that's kind of a rare event, honestly, to have that kind of proximity. So maybe the fact that we hit both of them And the fact that we had all these sellers here that got busted and then we retook it, right? All these sellers got sold. They sold this LVN, and we busted over the high and hit like we basically ripped past all of them. Someone bought heavily at the high of yesterday, 4,000 contracts plus, and then we fell back through it. So if these guys were convinced that it was a sell here, and they got stopped out, and then the market returned to their order point, if they reject here, those sellers that made these yellow rectangles, those sellers are confirmed to still be in the market. So in other words, if this stays as resistance, buyers are going to have a hard time. So buyers need to basically immediately fight this. Come here, Cat. Otherwise, they're going to risk a liquidation break. So it's an interesting spot because it's not, usually we learn that like it's not very healthy to have like straight up markets. But the truth is that, well, that's true. But straight up markets can go on for a lot longer than you think. And when like, while people think that because it's like quote unquote unhealthy, that they can just short what looks like the high and make money. But what often happens is just as this looks like it's gonna start to work, it gets taken one more time. And then like at 7:30, everybody finally gives up short and then it can go. So, but the crazy thing is that for them to continue to go higher, they're either going to need to trap shorts or to immediately continue to move. They need momentum to build. Well, so those are the two options. Either if you're bullish and you think it's going higher, what you expect is either momentum's going to continue to build or that you're going to trap shorts somewhere and then go higher. Well, the problem with the trap shorts idea is that all the shorts are up here and we're under them, right? So how do we trap shorts? Well, we'd have to get them to aggressively defend or aggressively attack. How would you get shorts to aggressively attack? You'd probably have to go lower, right? So in the end, all of that being said, my logic says if we need to go lower to trap shorts and go higher, but yet bears are having success here, we might not be able to go lower and go higher. Like shorts might not get trapped if we go lower. In other words, the only option left for bulls is to increase momentum. So all that says that if bulls can't increase momentum here, it might be a short. And that bulls' best chance, even though it's normally to pull back and trap some more shorts, their best chance in this specific scenario may actually be to bust through this right away, which is rare, but, and like I said, quote unquote unhealthy, but it might be their only option right now. In which case, the algo, didn't quite catch it because the algo said no signal. It has this green outline, which it basically means that there's probably a star on another time frame. And that star was here on the smaller time frame. So that green outline, because see, normally the bullish bars are white, but when there's a green outline, it means that on a different time frame, usually a smaller time frame, there was a buy signal. And it's something I've added that just helps me keep an eye on things. So like, see down here, you've got green outline, green outline, green outline. It's because on a smaller time frame, you have aggressive buyers coming in. See all these signals? That's what those are. So they're all signs of bullish momentum, but they're on a smaller time frame. So it's aggressive to buy it, but as long as you have a small target, a nearby target, you can do it and it works. Because on a smaller time frame, it's a valid buy signal. So here, like I said, for me to buy this, I would have needed a star here. So I didn't get it. My star was misplaced by one bar, so I can't, I'm not going to buy this one. But if this was a star, my target would be 10 points higher, which I would have gotten 12, 15 maybe. So I would have gotten like 1-to-1 here. But notice this green outline says that we had a buy signal on a smaller time frame, which was here. Well, this smaller 16 tick time frame, I only need to have about a 10-point stop, and each one of these is 8 points. So you can see that this clearly hit my target of 1-to-1, right? So if I wanted to scalp it, the solution would be, when I see this green outline, switch to the smaller time frame. Oh, actually, it's this one, isn't it? Yeah. And buy in here with a stop down here, and then try to get at least 10 points, and then probably get out because the higher time frame did not trigger. And so the algo is saying on this time frame, there's not enough aggression to print the signal on that apex bar here, to print like a diamond or a star or a green inside the bar. There wasn't enough aggression, but then it did come during this wick. It came in. That's why you got a star here. Is this wick did have an aggressive buyer, but on the tiny time frame, since it's relative, right, to like it's a relative system. Like on the smaller time frame, it's looking for the same ideas, but on a relatively, it needs less information to confirm that signal because the bar is only 16 ticks wide. So it triggered here, and so on the smaller time frame, and then purple bar star gave you another entry. So like I said, you can just scalp this all day, and it does work, but you're gonna take more stops. So I guess even though I got the green here, I could have gone to this one and taken the long here on the pullback, and then gotten out 8 to 10 points higher, and that would have been kosher. And I would just mark that I took the trade in my journal. I would mark that I took the trade off the 16 tick, and basically the 24 tick green outline just alerted me to the fact that there's probably a target down there, or a trade down there. Now look, like I said before, the only ways bulls can continue this momentum is they do so right away, because they got to take back these heavily contested areas. It's heavily contested prices. And note, they're trying to do it, and they got aggression on this bar here, but it's pink, and then there's also a pink one here. So sellers are giving up here, and buyers are getting price to rise even without a lot of effort. So if a seller decides to put up a fight, which they probably will, we could see this be given back very quickly. Usually the purple and the pink bars get retraced. Usually. Not necessarily immediately, but eventually. So like this pink bar, as it comes up, it's probably going to get retraced. It does not mean that it can't go higher. This purple bar down, probably going to get retraced. It does not mean that it can't go lower, right? But on the, like this purple bar gets retraced. This pink bar gets retraced, right? That's normal. That's just auction theory. When there's not a lot of effort needed to move price, the market wants price to return there and make sure that it's legitimate. So these pink bars are likely to get retraced. If they can't do it right away, it's a sign of bullish aggression. It's a sign that shorts are not being aggressive, even though they have a good opportunity. And why wouldn't they be aggressive when they had a good opportunity? Because they're stuck, right? So if they can't retrace like this, see pink bar, higher, and then they try to come into it and they can't beat them, they're stuck, right? This not getting retraced means that they are very stuck, and the chances that, like now, even if they come back into here, this probably holds back here. So let's see, it might happen right now. Like I said, the only reason to think that might not be true is because this resistance had so much effort put into it. But let's see. Like buyers really tried to take this, right? 4,000 contracts. Now it's 4,200 there because they pushed again another 200 some contracts. But buyers really tried to take that 11,700 level, and they just absorbed them. Oh, there we go. So volume anomaly is the pink and purple diamonds outside of the bar, and then star. So that volume anomaly, and then look, red outline, because on a smaller time frame, it's also a signal to get short. So if you're quick, you can scalp that for 8 to 10 points, but you can see how fast you'd have to be, right? You'd have to have it ready, and you'd have to nail it, and then immediately be automatically out in 10 points, basically. But I've done it. It can be done. It's hard when it's fast, but in like Globex or even London, not that hard. Or like now, Holiday, like you could do it. But that is technically a short entry. I'm not taking it because I'm now bearish, but that's not surprising that we're getting. And my number one target is back to this point of control because it's a pink bar. My primary target on this time frame would be right here, which did not hit yet, by the way. But on this time frame, it was 10 points. And you could say that these got retraced. So really, on the smaller time frame, this guy should have gotten retraced, right? So once you get this bar, I'm done with the trade probably. Like I'd already be out of the short. And that's concerning considering we haven't even hit the target on this time frame. So that doesn't really line up. And when I see that kind of thing, it's usually a sign that I'm trading the wrong direction. Because the time frame should line up. If you're trading in the right direction of it, like where the market's going, the multiple time frames should all agree. Now they might if we start to push, but at the moment, if they can't take this pink point of control, if they can't take that line, it's not bearish on this time frame at all. Whereas here, it does look potentially bearish. Oh, did they get to it? There, they filled it. Okay. Cool. So now they've gotten under it. All right, perfect. Now they agree and both say, okay, now we trust that this top is potentially the high. So let's see now what happens, because now we've retraced this pink bar, which is normal behavior, meaning that momentum is not increasing, because if it is, we'd get this, right? Just like where these don't get retraced. And I said if momentum's not immediately retracing, the big picture is this could be a bearish location. So I didn't have confidence that this was a short, right? But now if it sets up again, it probably is. So even shorting into this area probably makes sense now. Like if it retraces back up here, you can technically sell and put your stop up here above 700. Doesn't mean it's always going to work, but that logically makes sense. It also doesn't mean they'll give you the opportunity. But I can also look at the smaller time frame and say, okay, well, do I have anything going on here? Right now, you have a volume anomaly at the edge, the pink, a purple outside the bar, the purple diamond. And then you saw another one at a lower high. That when those work, the lower highs with the purple diamonds, when those extend, it's usually bearish. And so now, if we get just a little above this, and then a trap back in, that's a great bearish play. Or if we pull up here and then roll over with an orange bar, that would also be a good sell. But I'm not thinking buying. I'm not thinking of buying this zone anymore because of this here. So let's see. So technically, like I said, now I could technically just short it and put my stop up here, and that'd be fine. That'd be acceptable. In fact, I'll do it. So we'll put our stop. I don't know if it's going to work, but I'm going to do it. So I'm short, and I'm going to put my stop at 04. Or 475, let's say. You can put it at the high day, I guess. It's not that far from the high day, but I'm pretty. If we get above this one, it's probably going to the high day. Now I'm being a little aggressive because I'm not waiting for an additional signal, but like I said, the truth is this was a valid signal, but I wasn't willing to take it because I didn't know if we were going to retrace back into this point of control or not, and if we didn't, it would be very bullish. So the fact that we did tells me that we're not building momentum to the upside, and therefore that short was a good one. So if it can come back into that area and give me an opportunity to sell again, I will take it. So I did. Now I want to take my first profit about 10 points from my entry. So my entry is 88.75. So I got it in here, 88.75. Oh, I got a little low. Wow, that's a bad fill. But so I would want to get like 79, let's say. So I want to at least bring it down here to 78, 79, and preferably further. Like 67 would be a good target. And then if I want to hold runners, I can. I just can't move my stop until I get another lower high. So I do not move stops to break even. If anything, if I want to move a stop to break even, I should just be exiting all my entire trade. But instead, I take profits as we go, and that works better for me. And then hold runners, and if those runners come back on me, like that, so be it. Because if I move my stop to break even after it starts to work, what ends up happening is they come back, they take my stop, but they don't take, or they roll back through my entry, taking out my break even runner, but they don't hit my stop, and then they roll lower. And so I miss out on every time that happens. I miss out on potential profits. So in my opinion, you're better off just taking all your profit at like your first or second target and not holding runners, or leaving your stops where they belong, behind the bar. Now, this might just totally stop, right? Like, it's pretty bullish. But I have a read that this could be the high, and if that was the high, then this is a valid short. So we'll see. It might not work. But the fact that they did bounce off of this, well, not bounce, but the fact that they got through this POC told me that this momentum was not building like it was here, where they couldn't come back. So we'll see if that's true or not this time, but usually that's the case. It's just, like I said, it's grind higher, so it might need to take liquidity one more time. And the truth is if it pops up and then rolls over on an orange bar, I'm supposed to take it a second time. They might take it. Look at that, they're pushing. So they're going back up to this, where all the volume was in the bar. Remember, this had a volume anomaly on it. So, and most of the volume's in the wick. You can see where that dash is. So they're trying to come back into there and test that high again, that 11,700, which is why you really do need your stop above that. But they could definitely just like spike and then roll over. And if that's if you're bearish and they do that, like you just have to take it again. Unfortunately, the shorts sometimes stop, even though you're right, and then they re-trigger and you just have to take them twice. And like I said, that's just the game we choose to play if we're going to take it to the short side, because when the shorts work, they work quick, and when they fail, they grind out. So we'll just have to see. So they're back into that LVN where they had all that volume. So a bunch of sellers sold this. They went lower and then came back into them and then tried to go lower, and now they're trying to get back into them again. So by being short, I'm asking these guys, I'm expecting these guys to support my sell by absorbing all these buyers. That's my expectation. If it doesn't happen, I have to reevaluate. Right? My expectation is that they're going to absorb these buyers. So technically you could still get short, even if you didn't get short here. You could get short anywhere in this bar. All of it is valid. Any of these locations are valid, and your stop still goes at like 04.75 or whatever. But you're fading a huge trend A. So, all right, so that's another volume anomaly diamond. On a higher low, those usually work to extend. So if it's bullish, it's going to spike here and it'll take me out. That would be normal, and that in that case, then that would mean I'm done shorting, because that would be a sign that volume is or that momentum is actually increasing to the upside. It looks like they're going to stop me. They're trying. Not stopped yet. And this is where you just have to accept that like you took the risk of the trade and whatever happens happens, and then you'll reevaluate it after. There's nothing to do here. You're just underwater a little bit. You know, it's all, you're off sides, but I know where my stop is. My risk is managed. And the read was I thought I could get a decent pullback back to 60. So not always right. But yeah, it would not be abnormal to spike up here one more time to like 11,715 and then roll over. Not at all abnormal at all. Just part of fading a move. You're not going to be right every time. And the easy solution to that problem is you just don't fade them, right? I got a little bit anxious to get into a trade and decided to try a more aggressive entry. It looks like they're going to stop me. They're definitely trying. Just watching the DOM, like the buyers are really trying to push here, and like I just want to like exit the trade, but I can't. Like I have to let it stop me out where I'm supposed to because it's gonna stop, but like you just have to let it play out. Wow, they didn't get me. I've got 2 points of cushion, and they haven't taken it yet. They're gonna take it. They're not gonna come all the way up here and let me go, are they? They went like 1 tick or 2 ticks behind it, but did not stop me out. Got really. They're gonna come take it. I'm sure they're gonna take it. But this is why you don't just give up on the trade because it's not invalidated until they stop you. And they didn't. They did not stop me yet. Super tempted to exit the trade early, right? Like it's just like, oh, save a half a R, you know. But yeah. You just let it do its thing, and then the time for evaluating whether or not it was a good trade or not is past, or it's in the future in my review. It's not necessarily, you can't evaluate it during the trade. It just either works or it doesn't. I'm sure they're gonna spike it. What sucks though is if they do spike it and then roll it over, like I'm supposed to take it a second time, and that's gonna be a really hard trade to take. So there's that. See the absorption sign, so that's signaling that if we close bearish, most likely, or that they are trying to absorb it here. And if you watch the DOM, you can see it. Like buyers are pushing and sellers are standing their ground, so that's why that arrow shows up. Getting 2 in a row here is actually pretty dangerous for buyers. But they can still steal the stop. Like it doesn't mean it's gonna work. But it's definitely what I should be thinking about here is actually adding to my short when I see that show up. The best decision is actually to add, and then you leave your stop where it is. My stop is actually at like 0475, I think. It's not going to work very often, but you're only going to risk a little bit. And if it does work, you've doubled your profit. You know, so like if I started with 8 micros, and I add another 8 right here, and then leave my stop where it is, that second 8 has like a 5-point stop, whereas the first 8 had like a 15-point stop. So while you do increase your risk, you can then exit some of your trade down here on the next pullback. It doesn't always work, obviously, but it's an advanced move. And it's a good way of managing these trades where you're like, I don't know if this is going to work. It's like, you know what? If you've got a good opportunity to add to it, you can add to it, and you can potentially then cut down on the stop when it struggles to continue here, and you might actually get out of the trade break even or better. If it doesn't look like it's working. That's a better choice than bailing on the trade, in my opinion, because the times when it does work, even though it looks like it's not going to, it absolutely kills your confidence if you bailed on that trade and it ends up working for you. Oh my God, it just ruins me. So I'm not allowed to move my stop, but when it approaches the stop that close, the best thing to do is actually to add to the trade. And then, like I said, as soon as it starts to drop, you just take a little off, take a little off, take a little off, and suddenly you're almost risk-free on the trade. So I didn't do that this time, but I have the right to do it, and that's I mean that's the better way to handle this. Even though it adds to your risk a little bit, they're gonna come stop me, I'm sure of it. Wow, they really can't do it. I'm shocked. They're gonna take it. What the fuck? Shocked they haven't stolen that stop yet. It just seems so easy. It's like right there. There's just like a little iceberg and they just can't get over it. Like, yeah, this is exactly the scenario where you add to your position, knowing that you're probably gonna get stopped out on your core, but you can scalp away 8 to 10 points on another position within this bar. Just because you know where the resistance is, you know where to put your stop, right above that iceberg, because they're gonna take it once they break through it. But you can slowly whittle your way down with a small risk by shorting here. It's just, eventually they're probably gonna take the stop. So you can't do it over and over and over again, but it makes sense to sell this. Very hard to execute though. Okay, here we go. Oh, is he back? They broke through him, and then I think he showed up again.
Order filled.
Okay, I'm adding to my trade. I'm gonna try to leave my stop in the same spot. Maybe one tick behind it. Okay, so we'll go to 525, and if they take it, they take it. It's fine. But now I can try to make this trade free by if we can get back down to this LVN, I could actually exit break even, or better would be take a portion off and then potentially have a free ride if it decides just to like release. So here I'm gonna wait for that LVN and then try to take a little profit just as I get into profit on the so as soon as my P&L on this trade becomes profitable, just a couple more points than that, if they'll let me, I'll take a piece of it off. I don't know if they're going to get me back to profitable though, but if they can drop just a little bit further, no, they're going to go. Here comes the buyers. I don't think it's going to work. I got right back to not to break even, but on the new break even, I probably could have exited. Yeah, they're gonna take it right here, I bet. But it was such a cheap test.
Stop.
Okay, they got it. That's all right. It was like I only had to risk like another $40, basically, and I could have gotten out of that trade for break even, which is. Like I probably should have for like a 13-point loss, but I was being a little greedy and I wanted to see if I could push it. Okay, so now the question is does that change our read of this area being important? And I'm like I said, my guess is they are gonna rip through this area. And they've made a new high. And all the volume's the low now, right? So I'm pretty sure. Yeah, so the short is no longer valid in my opinion, and it was risky as it was. But it could have definitely given me 20 points if we would have gotten back to the underneath 70. I could have gotten a nice little chunk of it. So I think it's worth trying, but it's risky. You're fading a trend day. Trying to pick the top basically. So even though it was valid, it's always going to be hard to counter those moves. So here they come again with so they closed this bullish, so they never got that second absorption arrow to confirm, but we saw it, we know it was there, and then see this little rectangle, that's indicating where that heavy seller was. So now, if you want to repeat the whole system, you got to start over the whole thing again. So now, bullish, if they stay above this rectangle, and they can come back and tap it and bounce, and that's probably it'll produce extensions higher. But if they can get under it and then come back and reject it, you could get a rollover. But you can see we got under it, we came back, we rejected it, and they saved it, right? It did retrace this pink bar, yet it still got an extension. So that read was just, sometimes it works and sometimes it doesn't. Knowing when momentum is done is it's a crapshoot. And generally it continues. Now I will say, once we got this volume anomaly signal here, if you recall, I was pretty sure that trade had broken, because those diamonds on a higher low, the diamonds outside the bar on a higher low in a bullish trend are usually buyable. In addition, diamonds inside the bar indicate that there's a trapped seller here, and those on a higher low in an uptrend are usually buyable. So had I not taken this short and I was waiting a little longer, if I was a little more patient with it, and I would have waited for this one to close, if I would have seen it close green with a pink diamond, I would have just skipped the short. But the rules say I can't exit the trade early just because I think it's not going to work. That's not part of my process. I get to be discretionary until I make the decision to trade it. I don't get to have discretion once I'm in the trade. The only thing I can do is add to it if I can do it at very low risk. And then that second trade can have new parameters. But that first trade, those parameters are set when I make the trade. And that way, I'm not going to chicken out of positions or change my mind about where my stop should go and stuff. I'm not going to risk more than I'm comfortable with just because I think I need to move my risk. But you see here, it made sense to put my stop behind this. I didn't need to put my stop at high day, right? So by moving my stop down here, I was able to take add on this bar way up here. This could have been me right here. I was selling there, right? And so, but my stop was right there, 4 points above. So I was able to take 8 contracts on the micros on 4 points of risk, right? And risk another, what is that? $20 or something, with a chance of breaking even on that trade. I could have gotten out for a $13 loss had I been nimble. But like I said, those it's an advanced move, and it's not the right thing to do is just don't fade it. Right? That's the easy solution. Just don't try to guess where the top is, and just keep buying it anyway, even though you don't think it's going to go higher. But I mean, you can't when you see something like this develop and you get above this previous high, if you're going to pick a spot to short, that's it, But you have to know that you're taking a calculated risk, and that when you're wrong, and then you just go back to buying again. So a little cavalier of a move, but like I said, at least it was on super low risk. When it works great. It's just not going to work barely as often as the longs will. Now look, if they hold that voodoo range level here, it's going to be another extension. God, that'd be sick. Look at that. See how they can't even get a contract below it on 11, 7, 15, 25. See that? They if that continues and they go higher, this is not done. Yeah, they can't break underneath that. There's this, and it's funny because it's there's 10 contracts in there. It's not even a hard. That's the thing about holiday trading. You don't need much to hold the market up. But look, yeah, see there, that's bullish. Do not fight that. We saw the same exact thing here, right? And then they just can't take it back. Okay, they finally tested under it. Let's see if they show up. Because remember, pink bar means that price went up even though they didn't have much aggression. So sellers were giving up here. Well, now buyers are giving up. If they print this purple somehow, that'd be impressive. We could get another pullback just like we got here. I'm still not selling it though. We'll see. It looks to me like there's just no sellers. But yeah, it's pretty extended. But see all these pink bars in a row? You'd expect those to eventually get retraced. And then all the volume is down here, right? All the volume is down here at 11,700. So the natural thing the market wants to do is to come back and test that. But sellers need to get, like, they have to think that they're going to be right to do that. So, yeah, like, most people who look at this chart are like, yeah, I don't want to sell that. And that's smart, right? But if someone decides to push and you get some momentum, it's going to come back to 11,700. The problem is you got all these big yellow rectangles. Those are all aggressive sellers, and they had success for like 15 minutes, and then they all got busted. So this whole area here is now pretty solid support, I would guess, because these guys are offsides heavily. And so I don't even know if we're going to get back to 11.7. Now that I think about it, because these guys extended that high and they absorbed this, we might not even make it back there. God, that sucks. Which probably means I won't get another entry. So what we want here is a quick and dirty liquidation so we can pick off a piece of that, because so we can pick it off down here. We want it to get quite a bit lower so that we can open this up a bit. Going straight up like this just doesn't give us any opportunities because you can't really buy a breakout. I wouldn't. And we saw what happens when we try to fade it even with low volume, with low risk. Like, it looks like it's going to work and then it just zoop. So it's not bearish, but to get a good opportunity, we need to get a better price. So another big seller here. Those empty rectangles there are heavy sellers. Okay, and the arrow, if the arrow prints, I don't know if it will. It would have to go bearish, and if that yellow arrow prints, that's a sign that there's actually momentum to the downside in the bar, which might give us a real pullback. Like that. See this arrow here? So it brings on these rotations. That's what we need to like open this up a little bit. And see when they're blue, it's the other direction. Right? It's not always the apex, but a lot of the times it is. But look how like no one is following through on the sell side. Like, despite all this absorption, all this volume and momentum and everything, like once they get above them, like suddenly no one's interested in selling again. And it just shows you how stuck those bears are from back here. These guys are just that stuck. That even though if they were bearish here, you'd think they'd be even more bearish. It's a better price now for them, right? But like, yeah, they got wrecked. So they may not even be able to come back to their entry. We'll see. So there's that arrow again. See, it's going to flash on and off until they close the bar. And then once the bar is closed, it won't flash back and forth anymore. It'll either be there or it won't. So this bar should turn orange if it closes bearish, I think. And that would finally be a sign of aggression, similar to this. Pink bar, orange bar is it's kind of close bearish to do it, but that's a hard combination to get above. But so is pink bar star, and they easily broke that. So, but look, they can't even. They're having trouble closing this bar, even with momentum. Like, I know there's momentum in here, and they just can't continue it under 11.710. Like there are just no sellers. Look at that. There's no follow through. Like some heavy sellers up here, and he can't get anyone to follow him. Look at that. Okay, bathroom break. I'll be right back. I don't think I'm gonna sell this. And for it to be a buyer, I need it to at least come back to 11,700. So I'm gonna step away. I'll be right back. All right. Yeah, they're not budging. Yeah, there's just not a seller in sight. And you guys, I'll be honest, like this is when you see action like this, where like it's just one sided and yet like it's grind up is what we call it, or grind down, where like it looks like it's gonna maybe top out and then they just push a little bit higher and then they sit here and they don't continue it. It's not wrong to walk away from those markets. Usually, it's the people lose way more money, believe it or not, in this action than they do when it's volatile, because at least when it's volatile, you have opportunities. Whereas here, if you take a big loss, you may not get the opportunity, like a good opportunity, I should say, with discipline. You may not get an opportunity to make it back. So it's a good time to be conservative, right? Like that trade that I took was pretty aggressive, but I know it's valid, so I'm fine with it. It's just it was aggressive, right? And I need to do some more research. I thought that this was going to help me, and it did for a moment, but it didn't end up mattering. So I want to see on both sides of this. If those big deltas might have more meaning when they're with the trend than when they're against the trend. And I'll look into that. I think it's good information to look for. But for me to make, I'm down like, after that trade, I think I'm down like, yeah, less than $200. So I'm down a little bit, right? But you can see that my win rate got crushed there because I added to the trade. And so now all of a sudden my win rate's down to 36, which is pretty bad, right? So that's what happens if you get too aggressive on the wrong side. Now, what's frustrating about it is that I had opportunities to get like a 50-point trade here that I missed. And then had I not taken this one, this long was technically valid. It would have been better if it would have traded under here, but it didn't. And so by taking the aggressive trade and skipping taking the aggressive trade on the short side and skipping the aggressive trades on the long side, I get an inverted risk reward and a red P&L. Now the day's not over yet, right? But the goal shouldn't be to make that money back in the next hour. That if that's your goal, you're probably going to lose more. Instead, my goal should be to preserve capital and to recognize that the opportunities were limited today, and even though this was a valid sell, it did not hit my target. It didn't pay off, right? The ad was valid. The initial entry was a little bit aggressive, but valid. So the bigger mistake was not taking this one and not taking the one that came off of the high. This one. I should have taken this one and this one. And I skipped both of those because by the time we got the high here, even though I was up at that point from an earlier trade here, and there was another here, right? I had a decent start. That wasn't it. It wasn't that big of a trade. Wait, where's the start of the day? I did not catch this. I must have just gotten a piece of this. And then I got a piece of this. I did not hold this whole way. And then, like I said, I skipped these thinking, well, I'm up for the day. And then shorted here and then added, which is, like I said, maybe a little bit questionable, but was my only choice basically right here with like 5 points of risk. Flipping me green to red, unfortunately. And like I said, the real unfortunate point of it isn't necessarily that I tried to fight the trend, because I had indications that there were sellers for the first time of the day, all day. There were like high volume sellers showing up here, so it makes sense if you're gonna fight the trend. Wait, I was patient, right? I didn't fight here. I didn't fight here. I didn't fight here, right? But what's funny is that those all worked, right? Most of them worked. The one I took didn't work. And that's just variance, right? I had plenty of opportunities to take more trades, and I skipped them. And then the ones that I decided to take happened to be the stops. But when I look back, there was no real reason to take the one I did take and not take the ones before it, other than just like my own discretion, being like feeling anxious about getting short and then later on deciding, you know what, maybe I will do it, right? Like that is the mistake. So in other words, if I'm gonna fight it, I should probably fight it here and here, and at least that way I end up with break even in that. It's because see here I would have gotten 15 points and at least gotten everything but runners off. And so that way, even if I take it here and I take a loss, I come out of this, I would take a 15-point loss. I would come out of this break even, more or less. Maybe down a couple points, right? But if I'm going to fight it, at least in something like this, you almost have to be aggressive. And so the real conclusion might just be just don't fuck with it, right? Like accept that I missed this trade, and if it doesn't set up, it doesn't set up. And then I could have aggressively taken. If I was going to be aggressive, I should have been aggressive here, right? I had decided to be conservative, which is fine. But then I need to be selective then with where I'm going. If I'm going to change my mind and be aggressive, I should be aggressive at a time when it makes more sense, or just don't take the trade, right? Just skip it. But I think I had signs early on, way back here, that the aggressive buys were working consistently. The only one that stopped was this one, literally all day. That was the only buy that stopped all day long. All of these worked. Every one of these signals gave me a long opportunity, and like I said, I didn't take enough of them, and so that ended up influencing that sense of like, you know what, the longs are working now, the shorts might start to work. Let's just give it a try. And so shorted this, but skipped this, and because I was short here, I missed this long. Right, so even though I thought it was going higher, but I thought I could get 15 points here on the pullback. I thought we were going to go back to 70. And so all I wanted was 15 points. But because I took this aggressive trade and not this one, the result is negative P&L, right? And so if you're going to be aggressive, you got to be aggressive in the right spot, in the right direction. But yeah, look at all these sellers, right? Like all these people trying to sell out. These rectangles are heavy sellers, heavy sellers, heavy sellers. They are repeatedly being used as support. See that? So we may get an opportunity, maybe, to come back through here and bounce. I don't know. This is now yet another LVN. But keep in mind, like, look at this. we're headed up here, if not here, right? That's where that's where the liquidity is. That should be locked. That's where the liquidity is. But notice these are not clustered. These are separated, right? So these two are a little bit close, but we could literally just rip through this and squeeze them. I don't know, right? Like it's possible. And look at ES. There's like nothing here. See that? It's just nothing until this cluster. This is definitely a cluster at 2400 or 4010. But now that we're above 4000, there's nothing stopping this. So you can't short now until it gets above here or maybe above here. Like there's no reason to short. Like I said, out of all the spots to short, I picked an okay one, right? But if I should have reserved that short for a situation where I was aggressive all day long to the long side, and I had plenty of P&L to give back and not really affect me, right? And it's just even though the signal was valid and it did produce a little bit of an extension, it didn't give me enough extension to take profits, and that's going to happen. But why even try it when there's plenty of when all of the longs are working? Why even fuck with it, right? Like that's what I should have. That's where my mind should have been. But instead, it was I haven't taken a trade on the stream, and so I want to take a trade. And it was a valid trade, and yeah, so I took it. So it's like I said, you can see how just it's not necessarily a mistake. It was an on-process short, but it was an unnecessarily aggressive decision. But thankfully, it's a small price to pay because I was up on the day. That's the good news. Is that it's all it would take is literally a scalp to make that trade back. But it's there's 30 minutes left in the day, and so you have to accept that you might not make it back today, and that's okay. What I'm not going to do is increase the aggression with the intention of ending at the high watermark of the day or something. But that should be a lot less important than staying on process and only taking trades that fit my plan. But I mean, even the longs in the tiny time frame worked repeatedly. Look at that. So I'll review it and I'll show you. There weren't that many trades. These holiday trading days there's not a lot of opportunities. It's a ton of waiting and a ton of being patient, and then you have to very precisely choose where to be aggressive, and then potentially hold runners because it can grind up all day. And that's normal. And so you have to, going into it, you should. What my plan was be conservative. Don't force trades, because there's a good chance that they just won't give you any good opportunities. The only opportunities today were aggressive entries like this. It did not have much. Look at that pullback. It's like just pulled right back into the LVN and just boom, right? I did not. I said it on the stream. I didn't think this was big enough of a pullback, and it didn't bounce. See, if it rips right away, like that makes sense. But when it didn't bounce right away, and then it just kind of hung out here, what I wanted, if you recall, is I wanted to get underneath this and then bounce. It did it, but only by like 2 points. And so I wasn't aggressive enough there, thinking this might fail, and then the next one I could buy down here. And it just didn't set up. I just didn't get that, right? So it's fine, but I shouldn't let the decisions from earlier and the results from those decisions influence my decisions later on. Because that's basically what happened, is I missed that, and so then this one didn't trigger on this time frame. And so rather than waiting for the next long, which would have made a lot of sense, I was like, well, this is actually, it's aggressive, but it's a valid short. I might as well try it because this one seemed to work. and then when it doesn't, you just kind of feel stupid. But as soon as I saw this, I was just like, oh, this is not going to work. But the process keeps me from making huge mistakes. And yeah, thankfully it's, it didn't trigger me to get back into it. It made it very clear that that direction is just not, it's not ready yet, right? It's still cooking. It looked like it was gonna like exhaust, and it just didn't. They got a big volume move, and they shifted volume higher and just ripped right through all these sellers, which that's what happens sometimes, right? Trends can just get super powerful and do stuff that you'd never expect. And when that happens, the only mistake you can make in that moment, really, like being short there is fine if that was your read. The only mistake is to keep shorting after that happens. Right? Like if that's what, if you thought, okay, this is probably the top, and then it rips through it, it's like, okay, you're done. Like it's not done, and you should be done shorting. Instead, you should be looking long only at that point, because that's clear. This should have worked. What I'm trying to say is this will work when it's bearish. So when it doesn't work, and instead it just rips higher, like it could just keep. It's going to close at high day as far as I know, right? So that's the important thing. And of course, the algo doesn't give me any more signals to get short. But you can see if you were trading the tiny time frame, you could make mistakes like shorting this, right? So that's you have to be careful with that. If you're going to trade the smaller time frame, you need to have direction correct. Otherwise, you can kind of rip your account apart pretty quickly. Even though that's a small stop, like you don't want to take a bunch of those. But if I'll show you, like it was consistently working to the long side, and then a lot of the shorts were working too. You just needed to know to get out. Wow, right through that LVN like it's nothing. So again, we got another volume shift here. See this big climb? Usually you'll get a retrace in there, but this is atypical price action. So we might not. And plus it's the last 30 minutes of the day. But that would be normal. That'd be healthy. Notice they already pulled back through this. They already re-auctioned this pink bar. That already happened. So they may not pull it back. Most of these pink bars are going to get re-auctioned. Maybe not right away, but eventually. And most of the purple bars get re-auctioned. That's just how they work. That's how the market works. Because those exist when people in the order book, they're pulling their orders, and so price falls through there or rises through here without really any added aggression. And so the market's like, wait, we went so fast through here, let's make sure that there's still buyers down there. Oh, there are, great, let's go. Right? And now it's done. And now these pink bars are just support. right? So this one, you can see that they had seller, the rectangle here is saying, and then the green extensions, heavy sellers trying to take that back, which makes sense. If you're scalping back through this, that's usually going to work. But as soon as they met this old resistance, it became new support, and boom, right? So it's just like explosion after explosion to the upside, despite heavy selling all the way through. See all these green extensions? That's a seller that got left behind, right? We couldn't even come back and tag him. And whenever you see that, you know not to short. Because usually what happens is it pulls back. See this? Green, immediate pullback. Green, immediate pullback. Green, immediate pullback. That's normal. This is abnormal. You should not see this if it's balanced. And the longer these exist, the stronger that level becomes, which is crazy. But I'll show you in the past, we've seen it. And like I said, you can actually put those on in both directions, but I only have them for the trap sellers. Because if you put them, it's already a busy chart, and if you put even more of these on there, like it's just too much. So I'm testing it out on one side, but it's helping me with location quite a bit. So it might be helpful to put it the other way, but I think what I would have to do, honestly, is I would have to program it to like only show up if we don't immediately retrace it or something. I don't know. I'll think of something, but there might be a way to show when it's left behind, because that is useful information. Whereas like when you get them all the time, it's kind of overwhelming visually. And if I had that on both sides, I wouldn't be able to process it. It's too much. But you can see how important this becomes. This level becomes super important now because of all these heavy sellers. Like if they come back here and bounce off that, it's going to fly. I don't know if they will. It doesn't look like anyone wants to sell. Man, there are so many retailers short, you guys. It's not even funny. Like, just look at your Twitter feed. Everybody like praying for VIX to go up. Like, it's like, oh my god, everybody's short. Not even funny. Oh, I shouldn't even laugh, but like I said, it's. I just love looking at my Twitter feed and seeing all the perma berries getting totally smashed. Sorry, I apologize if we've all been there, right? We've all made that stupid decision that like we're just gonna hold our positions because we have to be right eventually, and yeah, eventually blow up and you learn that's not the way to trade. But usually I've got one or two on my feed that are like stuck, but like today it's like, wow, it's so many, and that says that this could just keep going. So ES is finally approaching a cluster here. See this little cluster of levels up at 4010 to 4012 or so. That's probably going to be resistance, but like I said, I'm not going to make any guesses. So that's ES is down here. I'm not even really watching it, but oh wow, they're actually trying to absorb sellers here. Nuts. Look at all this absorption. Jeez. Oh, you know what it is? I think is it possibly because volume is so light that relative volume looks strong? I'm not sure. I'll have to look at that. I wasn't really watching ES today. But that's unusual to get these back to back like this, where you get sellers beat and then buyers absorb sellers. That's strange. I actually, I'm trying to think of how to interpret this. If it prints, I don't know if it'll print. It's still a live bar. But if this prints bullish, that means that buyers were getting absorbed here. And now that we've gotten above them, and they tried to sell back into them, and sellers then got absorbed at the lows. So if we go higher than that, sellers are now trapped. So this becomes a pivot. That's what that means. So this is your pivot. 4,006 to 4,750 becomes an important pivot. Hold above it, it's bullish. Get below it and reject under it, it should be bearish now. But only if it closes up here. It's stuck at that 4,850 Hold on, that's last week's voodoo range level. That's funny. I didn't change these. I've got these in the wrong spot. Yet it's acting with resistance. That's a little weird. I accidentally left the voodoo range level. I like literally haven't looked at ES all week, and I left the voodoo range levels as they were. And I've seen that happen before, where they sometimes act as resistance and support even weeks later. But that would be crazy if that's actually the high. That might be worth investigating a little bit to see how often that maybe they work longer than a week. So let's see. Like I said, I really want it to close up here so that I can. I do not see this very often. This pattern is unusual. But I'm pretty sure that blue arrow will only exist if they close at the high. I'm pretty sure it'll disappear if they close to the low. Once it closes, it won't change. But while it's live, it can disappear. So let's see. But I don't know. Maybe it just does it on ES more often than on Q. Yeah. See, I don't see that pattern very often. Red arrow down and then immediately in the same spot or right above it, blue arrow up, or vice versa. See, blue arrow up gets beat and then that becomes support once they retake it. See that? So if I put the level here, they try to get under it, they get absorbed. See these purple bars? They get absorbed. Purple bars only underneath it in wicks. It's done. It's not going any lower than that. See that? Man, that looks so easy in retrospect. So the same thing can happen in the other direction, but it's not today. But what I don't usually see is, oh, see, it disappeared. So what I don't usually see is a red down, and then in the same exact spot, just moments later, a blue up. So it's like, this is strong resistance where everyone's absorbing all the buyers, and then they get higher than it. It's like, this is strong support, and everyone's absorbing all the sellers. Like, that's weird. It's clearly an important spot, but let's see what happens when it closes. Maybe it'll come back. It's not really anything if it's not there when it closes. You know what? It might have just shown up there because it was so early in the bar, and it's a relative measurement. So maybe the reason I don't see it very often is because by the time the bar closes, it has more information and it's less likely to happen. That might actually be the case. Let's see. Let's see what happens when it closes. That's all that matters. That's the important thing. Anything until the bar closes is kind of meaningless. It's just a warning that it could happen, but it's nothing until it closes. But that's definitely a pattern I've not noticed before. So I'd love to see what it does. If I had to guess, I'd say it's probably a sign we're going to get a squeeze. Unless we get under it, then we might get a liquidation break. I really do think that that's a pretty important level. Let's see. God, there's just no way I would trade up here. It blows my mind that anybody is trading up here. We're actually getting some decent volume, which is nuts. Like, look at that delta. NQ not so much, but ES is actually getting volume here. God, I wish I would have held those fucking calls. That's all right. At least I made money on them. God, but I never give the market enough credit. Like I even said it in the room this morning that we know markets like to grind up, so assume we could close at a high day. It might just keep going. Like, I did not think we were going to get over Friday's high. I really didn't. And I thought if we did, that we're probably done for the day, and then we'll chill out tomorrow, and then after FOMC, maybe we'll go higher. But what I did not anticipate is going back and possibly like breaking high of week from last week. That's right. Is that really what we're Wednesday? Okay, not quite that high, but we're above Thursday's high, we're above Friday's high, and we're approaching, that's Wednesday night. We're above Wednesday's high. We're not above Tuesday's high. So Tuesday was the big spike, that's right. But this is a big retracement into that level. If you're bearish on the higher time frame, this doesn't make a lot of sense to you, right? And so the easy way to explain that is that price action isn't bearish. Even though I know all the economic information is, like, That's not bearish price action. Now it's possible that that changes by the end of the week, but this looks to me like a market where all the sellers are on vacation and the buyers are just having the time of their life buying for no reason, and they're probably mostly short term, right? But I can't even imagine having like a bear thesis right now. How I would feel if I like got super short and for some reason put a stop like I don't know above like on a higher time frame got short and like put a stop above like 40-50 or something on ES and was like I think this is bearish. Like yeah, I'm definitely sweating now, right? So knowing that, that's how I feel, and I know that a lot of retailers did that because I see it on my freaking Twitter feed. Everyone saying the market's broken. Then there's a good chance it just keeps going, because if there's people still saying like this, it's a fake pump. This is close the market, blah blah blah. Like that's a sign that it's the pain threshold has not been hit yet. And clearly the pain trade is to the upside, but I'm not gonna just buy it. That's for sure. But you can see that like this orange bar followed immediately by green bar, that takes a ton of energy. And so if they don't get an immediate push from that, that is often the last move up. Is orange bar followed by green bar, and then like extension ends in a pink bar and rolls over on a star or a diamond. That's normal. So let's see. I don't know if it will happen, but usually they would need, what I'm trying to say is they would need to have more. I know I said it back here too, but they need more aggression. The buyers need more aggression to get higher than this level than they did to achieve it. I mean, doesn't mean they can't do it though. But I don't know if I can maybe find that signal, that pattern somewhere else and demonstrate it, but maybe after we close I will. See, this one's got, it's a 3-bar combination, orange bar, nothing, and then green bar. That's not as hard to sustain. That's actually just bullish. But this is hard to do. And so anything above this needs even more aggression to keep going. But I just don't see any sellers. So what are you gonna do? But look at this. I mean, these are that's a big seller. They are there. They're just absorbing it. That's nuts. Over and over again. Oh, it's into the end of the day though. Last 15 minutes of the day. They get a lot of volume in here relative to the rest of the day normally. So that might not be as meaningful as it usually is. I can't believe they didn't even come back and test this though. This is honestly just squeeze. It's just slow motion squeezing. Okay, are we up to that level yet? We're still not. 40, 10, 50 is really where this belongs. I'll move this one. These are all from, I left them on last week's on accident. And then 39.96. Even. Ah, what the fuck? Locked. Okay. All right, there. Yeah, let's see if we can get a pink bar here right into the voodoo range level. We might have a high. Like I said, orange bar followed by green bar, followed by an extension that ends in a pink bar, and is followed by aggression to the downside. Often is the top. But what do I know? Like, I thought this looked done too. So who knows? If it's not pink when it closes, it's just gonna keep going, I guess. There's really nothing else to analyze here, though, other than just to see that you can't be shorting it. Okay. So this is a high volume edge up here. Those can act as resistance sometimes. Oh, there's another absorption signal. But you can see that they really aren't producing any response. In balanced markets, this will be the high of a rotation. But keep in mind this rotation, these VR levels are right. This rotation is beyond 1 VR now, right? This measurement here is, oh, I don't have the levels, 80 to 40. So it's almost 2 VRs. I've seen it go 3, but usually not more than that. 1 is normal. 2 is like, you know, probably a standard deviation off. 3 is like 2 standard deviations off, and any more than that is like super rare. So if we measure it, if we say that the rotation started here on this one with the volume anomaly, like let's say that's 80. So 120 would have been 1 Voodoo range. No, 125 right here. And so you have to do another 45 on top of that. So 70 would be 2. So I'm wrong. We haven't made it 2. Okay. Is that possible? 1. We haven't made it 2. We've made 1.5. Can't do math, sorry. So more than 1, but not 2 yet. Not that unusual in a trend. Not that unusual. See, yeah, pink bar with the red arrow. I'd normally be on guard for a rollover, but there's 10 minutes left in the day, so. Like, would I be shocked to find that the high day is 40, 10, 50? No. But it could also go up here, in which case ES goes to 16 or something. In other words, I have no idea how high they want to go. And we have MLC coming out in 6 seconds. So let's see what they want for market on close. I'm assuming it's going to be buy after all this, but yeah. Market on close is a buy. Oh, there's that pink bar, orange bar. Let's see what they do with it. See this? Pink. So orange bar, green bar, extension, pink bar, orange bar. That's usually a short. But like I said, I don't love shorting this. Oh, good. Are they going to put this in? That'd be great. Let me get that signal. Would be no. Okay, so yeah, this is technically a short, but it's a scalp. And I'd be looking for 2 points for my. This is ES, so I'd look for 2 points to 3 points for my first exit, and then I'd hold runners to see if I can get 10 or more. I didn't take it. It was right at MLC, and I don't have my ES dome up. But like I said, I honestly don't expect it to work for much. But it is valid. But I'm curious to see how they respond to it, because that'll tell us what to expect for the close. In other words, if they just rip right through it, then shorts are absolutely finished, because that's a high odds short that's not working. The stop for that goes at high day, by the way. And there's really no reason to put it any higher than that. Maybe 1 tick above high day. And you could have taken it on the retrace too. Like right when it comes back into that level, I could have actually sold it again. Like you can sell it here, and then you can sell it anywhere in this range. So I'd already be getting, I'd have gotten short at 09, and I'd already be taking profits here. I'd be down to like a 3/4 position, maybe a half position, and see if I could push it through this guy. If they can't get through this absorption point, it's clearly still bullish. They got it here too, pink bar, orange bar with a volume anomaly. Oh, see all of this? We're retracing it. So we're probably, look at that. We got 2 big volume sellers potentially acting as support down here. The market wants to test those. The fact that we're not immediately dropping to them is like abnormal as it is. It should just be like, right? That's normal. So when it can't do that, oh, look at this. Right at that, see that red line? That's where the absorption is. He is stuck. Dude, shorts are in big fucking trouble. This should have gone at least 7 to 10 points. Oh, maybe it's not done. But you can see there's a momentum shift in this bar. That's what that arrow says, assuming it closes with that on there. So there is potentially a momentum shift happening. And if you look on ES, we got to that cluster. See that? We got to that cluster level. So that's a very, very natural place to get some sort of a retracement. And it could even be the high of this like wave or whatever you want to call it. Oh, wow. Another volume anomaly to the upside. Remember, that worked beautifully for an extension 30 minutes ago. That's pretty bullish. Fuck, that's tempting just to fucking buy it. I'm not gonna do it, but I can't. I don't have the courage to buy the high a day and get a 15-point stop at the end of the day. But that's usually good to go. Triangle down, immediately followed by a green bar. The volume anomaly is like, yeah, don't be short. It's this exact pattern. They just did it again. It's not wrong to buy it. I like I said, I hate taking the stop at the end of the day. If I was green on the day, if I had a good green day and I didn't take that earlier short and gave back some, I'd probably just take it. Because think about it, it's probably gonna close up here. These grind up trend days usually close near the high day. So I don't think it's wrong. It's just, God, it feels stupid to be wrong there. We're right at this high volume edge. Like every one of these long signals, except for this one, the one that I was short at the time, every one of them is happening right into these profile levels, and that makes them really hard to take. But on a day like today, it might just not matter. Like you just kind of have to throw out all that location trading just kind of goes out the window, and you just buy at every opportunity possible. This one got the volume anomaly as well. It's triangle down, volume anomaly, green bar. It's the same exact buy signal. So we had a short signal here, and now a buy signal. So that short's probably wrecked. Not stopped out though. And so again, the way I would do it is if I had shorted this, I'd have to hold until my stop. That's the rules. You can't just bail. But if I didn't get short, I could technically have bought this. But if you were bearish here, it shouldn't really change just because you put your stop up here for a reason, you know. But they're technically trying to save this. Oh wow, momentum down and speed trap. So sellers are finally putting some aggression in. First time I've really seen. I mean, look, last time it got absolutely crushed. Did they crush this one too? The diamonds in the bar should be a really, really strong move. But you can see that's not the case if you're fighting momentum. But like I said, that's the arrow here with the diamond means they flip momentum to the downside, and they trapped a buyer. So if they don't sell it here, I don't know how they're gonna stop it. And you're now you can move your stop down to here. That's the nice thing is if you would have shorted the orange bar and you get another entry, you can now move your stop down. It's not break even, but it's smaller. But God, I don't like it. I would not be comfortable. But remember, we would have gotten our risk off, right? We would have gotten like 4 points on it. And so that's the important thing is to take profits as it starts to work and not like just hold you can't just hold for support. Like you have to take profits as it's working. And that way you're only losing like half an hour when you're wrong. Look at that. Well, they're trying to hold the Hooter range level. I don't think it's going to work. Oh. See how no sellers are following through? Like it should just, well, maybe not will. It should just drop like that. So it would not have gotten stopped out. That short would still be good. I'd be nervous AF though. But I'd be down to runner, so that's the good news. It would be a small position at this point. If I would have sold here. If I would have sold here, it'd be a full position. And that would blow. And this long is working. Like literally every long but one worked. Look at that. New high day NQ. And there it goes, stopping out that potential short. That's done. Whew, glad I did not do that. Wow. Right? Like it's just there's just no. I mean, they tried. It's the exact same thing as this. They tried and they just can't get anything going. See that? It's just a repeat, only quicker. And see how these guys become the support? These heavy sellers, which are these yellow rectangles, which happened in this bar. As we were coming up, they were heavily selling it. And so we come back in, they try to get under them, and boom, like a freaking trampoline. And look how these are left behind. So let's see. You know what might happen? They might end up turning this into a balance zone. That would make sense. Like now that they've gotten above here and taken all the short stops, now they rip it down, I bet. That would make tons of sense. I don't know why I didn't think of that before. Take the stops and then come back and look really bearish, only to bounce. But these do need to get tested. These green areas are going to eventually need to be re-auctioned. Because these heavy sellers, I mean, I guess they don't have to be. But they should. This is single prints up here. Wow. Oh, shit. Huge single prints. Right at the Buddha range level, too. God, is that right? I guess it is. I'm not going to blindly short it, but can't say I don't want to. Again, location traders are just like salivating to sell this. But because look at this, you got a low volume node, followed by a Voodoo range level, followed by a huge area of single prints. And so the thing is, if they get in here and they hold in here, it's going to retrace it, right? We know that. But if this acts as resistance, this is going to act as a magnet. I wish it wasn't the end of the day. Because that the location-wise, this is an important pivot. Oh, wow. See the absorption? Yeah. Look at that. Like, look at that. Isn't that pretty? It's cool, right? Okay, so let's just see what happens after hours for a minute here, because I'm guessing they're gonna try to take these back, and they're probably gonna fail. But let's just see. Do we get possibly a little bit of a liquidation break now that the what's it called, the retail speculators with all like the 0 day till expiration options, since they're now out of the market, and we know institutions are out of the market, otherwise you don't get this price action. Are the algos going to now revert back to as much of a mean as they can, which is probably 11, 7, 15, 25. That's probably their calculated target. I don't know if they'll maybe make it all the way back to 11, 700 just because they might get some capitulation here. But like I said, I'm not going to short post market. I think there's even earnings and stuff too still. I don't know. There might not be, but I'm pretty sure there might be. Oh look, we did get it. Look at, we got the blue. You can't see it because there's a star in front of it, but we got an absorption here too. So let's see, is this a pivot? Cool. So I get to see how that works out after all. And that is a printed bar, so that will not change. There's a blue arrow here absorbing sellers, and there's a red arrow here absorbing buyers. And they got above it. They tried to absorb the sellers, and now what I'm thinking is if they get below it, these guys are trapped. That's what I'm thinking. See, this guy's trying to absorb too. They would need to trade below it though, not just like wick below it. That's not going to do it. Just like here, like you can't just wick above it and expect it to go down. Like it needs to trade up here and then fall, and then it'll become resistance. And so on a pullback, you can technically short it. And maybe we will get a retracement. Let's see, is there... and look at all the volume at the highs. Let's see, is the volume way at the high? Yep. Volume at the high. So they need to get under that, and then they can head for this. And if they don't do it, if they can't break this for some reason, they're probably going to retrace all of this. Those single prints are just begging to be filled. But all I can say is that after this kind of a move, right, like this, like so, like up, only up, only up, only up, and then you approach this level, this amount of single prints, the market's going to much prefer to reject here, mean revert, trap shorts, and then rip towards it. So what I'd love to see is a retracement into into Globex, and then London get like a buy opportunity down here, and then trade that all the way back up. That'd be freaking sweet. I don't know if we'll get it though. They might just take it now. Let's be honest. They might just take it now. Yeah. So I mean, well, that's the day. I think I'm gonna review the day, but I like to do those as a different stream so that people who aren't all that interested in the live trading and just want to see the review can get to it quickly. So let me grab a snack, use the restroom, and then I'll come back with a new link to a new stream, and we will review the day. But hopefully this was at least, like I said, entertaining, if not educational. Sorry we didn't get that many trades, and the one that I got on the stream did not work out, unfortunately. We saw them, I just didn't take the good ones. But I want to review the day and just see where what the first point of aggression could have been, where I could have turned up the aggression on the upside and possibly made this a better day than it was. Like I said, it's not a bad day. It's just missed a lot of opportunities. So it's important to review those. And then I also want to look at two things. I want to see if I'm right about these green extensions that don't get immediately tested. I want to see if those act as magnets, because I think they do. So I want to look back for some of those. And then I also want to look at and see if I can find any competing absorption arrows and see if I'm right that creates a pivot. So those are what I'll do probably in about like maybe 15 minutes. I will come with a new link. If you subscribe on YouTube, you'll just get the email notification or the pop-up notification. You can just join the new stream. Otherwise, I will post it to Twitter. So thanks for watching, you guys. I will leave this up on YouTube for at least a couple days if you guys want to see it. Like I said, we didn't have a lot of action, but we talked about a lot of stuff about like how to stay on process and not get tilted. So hopefully that's useful. And I'll be back for the review.